Good morning, that Yaz is loud. June 23rd, and we've got an echo. June 23rd, and we've got an echo. I'm using Edge now, and it starts all the tabs full tilt on volume. So yeah, it takes a little bit to turn everything down. So if you rewatch the stream, you're gonna your ears pegged in the morning. On the first little open there, it might get adjusted. No, looks good. Let me know if it's clipping or anything. Looks good. Good morning, Mo. Market opened. Somehow I just ended up with a late start. Didn't do anything this morning, but when you don't do anything that you have somehow late, when you're so prepared and waiting for something to happen, you somehow just end up being late to it then. Strange how that always happens. Big gap down, SPY down 0.86%. So, see if we get a reversal today. Test some highs. As the bulls have been doing every day. Or if this is a gap and go, that would be very interesting. Overstock down 1.8, GME is down 1.5. Barbecue's up 2%, 20 cents. So it's not been my browser because I was getting lag on it yesterday. I'm not sure what it is yet. I think it's better with Edge though, and I like Edge. Got some pretty cool stuff. What is up this morning? Phase is up. Companion up 7%. Barbecue 2.8. 1.7. Opinion's up 9. Kind of news here? True Painting provides updates on rate filing approval status in California. I guess it was not as bad as the news was portraying it. That's what this whole sell-off started on True Painting. See if it can hold any of that in this red market. Evitol's up 2. NRC down 1.5. Eyes moving up. GME's down 1.3. BBBYQ 2.8. 2015. I can't even see it on this chart. Oh, there it is. There's a candle. 4%. It is Friday. We'll see. We'll see what we get. See if we get a retest in this range. 18 cents, or if Friday's just a rip day. Morning, buzzin'. Happy Friday morning. I know I was late. There's no excuse. No excuses for my tardiness. None. Plenty of time. Prepared, didn't do anything this morning. Didn't go surfing in the morning or fishing. Nothing. Time got away from me. %4 there on BBQ. The big is up 2%. I like the trend that thing is on. Dish is down 2.5. Really hoping this is the bottom on Dish. If I breaks this high, I'll probably go long. This is yesterday's support, so kind of a big level. AMC's down 1%. Beyond is flat. Coin is flat. Dish is down 2.8. Safe down 1.8. Peloton down 3.25. Dang it, Peloton. Companion up 7. Barbecue 7%, 10%. Oh, the illiquid gaps are so sick. Kind of. 2150. 9.5%. 9.6. So kind of confirming this as a double bottom. Also, any bit of a higher low. 10% there. 2159. Root is down 4%. And 49. Yeah, it's illiquid in the extended hours. You have huge spreads, huge gaps. The volume has been decreasing these last few days. Yeah, in the 5 millions, and then it's been 4 million the last like 3 days. eToro is still not open? Uh-oh. Well, I didn't see any specific news on sell-off. Nancy Pelosi exercised 50 call options in Apple and Microsoft. She, as a result, purchased 500,000 in Apple and close to $1 million in Microsoft. An IRS agent has told the House committee there was meddling with the Hunter Biden case. Biden has said his dictator comment on Z has no real consequences on China ties. um 8.21%, 21 on BBBYQ. GME is down 2. Phase is holding up 7. Is just chopping around. We don't have anything going on today, I don't think. Oh, Bullard. Bullard was at 5 a.m., so that's what started the sell-off, I think. Even the futures were down. Oh, that is weird, actually. Yeah, the futures, like, after market yesterday, after the SPY closed, they really came down a lot already. I actually went long on them somewhere down here. Closed it out for a small loss. But Bullard started speaking at 5:45. Why? Is that real? 5:15 he started speaking? Strange. S&P Flash US Services PMI is at 9:45. Manufacturing PMI. And then Mester speaks at 1:40, so not a whole lot. I might dip a little more before it rallies. 432 I'd say is the next support. I might be trying to get to that Powell low. Hasn't fully made that inverse cup if you're looking at this low. It's this low. Kind of did it, and then yesterday you could say it was the handle. But I wanted more retracement on the handle. And to fully get the cup, this cup, you'd have to see how low still. So we might be seeing that still today. Nice fatty gap up there on SPY. 9:45. Look at the wicks. Barbecue 21 cents, 7%. Be slow on this morning. Go big lots. 4.5% on that one. Barbecue came down a little bit. It's up 5%, 2061. Buenos dias. Still closed, not buzzing. Exchange issues, that's weird. I haven't seen the trailer yet for it. I like the cast. I don't know if I'll enjoy watching it or not. I've enjoyed watching like all the documentaries on it, but to watch like a feature on it, I'm not sure if I'll like that as much. As far as like GameStop and stuff. Tight little range here on SPY. This week sucks for me. I mean, I can just look at the technicals. Yesterday was kind of looked like we're gonna set up for one last little push before a drop, and that still could be coming, but we're just starting it with the gap down. So yeah, we'll see. Consolidated below yesterday's support, so definitely using that as resistance at this point still, and might see a lower low down here, 432, making kind of a head. You have a shoulder, you make another shoulder up here for some gap fill today. What's the acquisition mean as far as with Overstock? I'm not assuming they're going to give out any dividends since they are Chapter 11. Dividends are, you know, for profitable companies. Even if it is a crypto dividend. I don't think Bed Bath & Beyond is like working with their stock to try and have some sort of short squeeze. I think they're a company that's trying to sell a product that they've not been able to make money selling for quite some time, and that's what they're working on. They just happen to be publicly traded, and you are watching it from that angle. GME. I knew I should have followed my TA. Where are you, Archer? You still think it's coming? You're 30 by what? The 7th? That could be, but where's it going to start from? Right? You said that this day. 620. The hell are my shorts on there? Oh well. Trust your instincts. Your own rules. The GNRC short call just closed. That is neat. Back in the longs. I need a little tight chop range here on SPY. Making a little inverse cup. Little handle, let's see. Tiny little range. Barbecue 2071 plus 5.6. Bitcoin is up. Alt shares are kind of hanging out. 0.5%. Root's down 9%, huh? Palantir down 2.6. NRC is flat. First Solar down 0.5%. Confluent down 3.7. Honda's barely green. Going back up to the top. AMC's getting to that level, it always bounces at around $4. Not so sure now though, that ape conversion. Coin's down 2.5. Ape is flat. Coin doesn't really move with crypto, does it? Like it used to. Safe's down. Drop up 9%. See if Sunrun bounces on this breakout. I think it would, but oh yeah, look at the SPY, man. Look how tightly wound it is right now. That's crazy. BBY has a fiduciary responsibility squeezed to 500 trillion a share. It's their job as a retail store. I'm still holding Root. I'm not gonna, unless there's new news that they're not a good value spike. Core just takeover bid, whatever. Yeah, I don't see any. I'm not seeing any follow up on the offer. So that 19 and a quarter, whatever, I think is still viable. 21 cents on barbecue, up 7%. He'll just SPY coding. Hi, David. Guten Morgen. Big Lots up 5. Mullen Trash is up 2. bottom of the watch list today. SMX, Space. Yeah, I think Space have a share off. Or no, this is selling off from the submarine, I think. Or no, it did have an offering. Yes. Little pump on these things, they're gonna take advantage. Fruit's down 10. Nicola's down 10. Wheels up. They have an offering. Restructuring advice? Uh-oh. 49%. SoFi's down 8. AI's down 8. Did I close my AI? Thing took forever to sell off. Open it up here, made a little profit, and then just I think I closed this and kept going. Havana down 5.5. Upstart finally started coming down. Neo's down 5. Joby's down 4.5. Come on, Joby, have a share offering or something. You need it. Fubo, yep, RSI divergence there. Good spy, man. Barbecue at 21 cents. 7%. Trupanion. 12% on earned 11.5. Was up maybe 15-20% after hours yesterday. Big Lots 5.5. Highs flirting with the highs here. Oh, there you go. There's new high on the day for SPY. Oh, into wick. More than 1 million college students could be at risk of not earning the bare minimum economic return that would make post-secondary education worth the money. Excuse me. Chamath says calls Warren Buffett the GOAT after figuring out his Japanese bet. Citigroup will start holding employees accountable for compliance with hybrid work model rules. Barbecue up 8.25 now, 21.22. eBet's up 7%. Ah, rival. Eyes climbing up there a little bit. Ravana's down 6.3. Barbecue 21.22. Staying underneath this resistance line for now we have here. That 21.46 area. So it's found a range. There goes the SPY. Trying to fill its gap. And red candle. Weird. Low volume day. Low volume summer day. Base really selling off. Down 19% now. High earners can save up to $200,000 a year by moving to Miami from major cities like New York and San Francisco. The new development bank established by the BRICS bloc of nations to reduce reliance on US dollar loans is having trouble finding dollars to repay its own debt. This is interesting. The US Navy had already detected an implosion on Sunday at the site where the Titanic submersible lost communications. But a decision was made to continue the search and rescue mission. Now, why did they push off releasing the information to the public until yesterday? Because it was like classified, right? We didn't start hearing about it till yesterday, and all this nonsense about their auction runs out at this certain time when the Navy had already found them. What else went on yesterday? Bit of a sleight of hand. They look left, you go right. Inflation in the US won't come down as quickly as markets are currently pricing, says Goldman Sachs. UK debt is now greater than the size of the UK economy. Dana White says Elon Musk and Mark Zuckerberg are dead serious about fighting the octagon. Dollar short squeeze? Oh, because of UK? Barbecue, 21.50. Up 9.5. If it breaks here, next bigger level's like 23 cents. Had a nice little dip buy yesterday on it. 21.80. There you go. There's a new high on barbecue. Up 11.25. Eyes climbing up. $22.20 or 22, yeah, 22 cents on barbecue, up 12.3. Like it's reaching for that 23 cents area. New 8K out? Well, what's it say? Got a lot of volume there. Look good. Be something bullish in there. See, June 23rd. Regulation FD disclosure. Oh, it's just like financials. Cash balance beginning of month, 813,000. Like their financials. Guess it's good. Debtors full-time employees currently 8,970. This is the reporting monthly operating report. Report ending 5/27. So like a month ago. A lot of it's just zero, just blank. Not seeing any 1.7 billion. Maybe the market likes it. Barbecue 22.20, up 13.25. Nice big bounce off of yesterday's low. Volume when that thing came out. Share it on Discord if you guys haven't already. New York fishing. Total rando. Calling out a stock. Probably the top. Probably the top. Once we start getting the bumpers in here. SPY bouncing off of the breakout level there. 240 on barbecue. Alright, we're getting that 23. Yeah, I think a lot of the information here is not privy to the public. Asset and liability status, getting no data. Assets sold or transferred, they're not putting anything. Income statements, they haven't put anything. We're only getting cash receipts and disbursements. Look how close the SPY just right with the VWAP on this climb. Crazy. Yeah, look at the VWAP. That's super weird. Barbecue 2247, 14.5%. Look at the VWAP continue to climb. That is so strange. $10.22 coming up on 10:30. Eyes not doing much this morning. Got barbecue up 13.5%. Guarantee up 10.5%. It's kind of moving right now. Thank you guys for your likes. We're at 14 likes on the day. Appreciate it. Iron T's up 16.5. 17. $23. Actually held up pretty well since I had that pump the other day. There's news on it. They did release an AK with some financials. This rally, when that was released, let's see. I don't know if it's from this AK necessarily. We're just bouncing up from the sell-off we had since we were back here. You know? Maybe we weren't even asked about the stock. I just wondering if there's news. No news that I've seen. There's an AK that dropped with financials. These slow, low volume days on SPY can really trap you. Just trying to force your trades on it. Gotta be a bit extra patient. Guarantees holding up 19%. Gallons up 1.5. Coin's selling off a little bit. Today on this thing's crazy. Highs coming down. You up so high. Iron net back to 23%. Got 25 cents as a resistance on there. That's probably first resistance. 449, still going. There's 25 cents on it. 28%. This SPY. This is so slow, it's crazy. 1 hour in. What's the volume like? Actually more than yesterday. Oh, we actually have good volume this morning. It's very slow. Weird. 30% there on Iron T. Not 25 cents. The spread like on here. Pretty big spread. Coinbase wins at Supreme Court as ruling reinforces arbitration. That came out at 10:18. 26 cents there on IronNet. So maybe that's what this little pump was from. But now it's back down. $0.26. So hold above there. Got 29. Yeah. More. The median existing home price was $396,100 last month, down 3.1% from a year ago, marking the largest year-over-year price reduction since December 2011. It's some of their financials. I shared it in Discord. You can look at it. PM pump. Yeah, maybe a gap fill. It's only 10:30. I have to wait till PM. Get it in the next 2 hours. Beyond is up at 1.8. NRC waking back up a little bit. 1% green. Lucid continues to sell off. Need $1. Bob. Lucid for $1. Here down 1.5. Listing at 12. It's getting there. Ah, root's kind of selling off. On 12.8. Barbecue coming down a little bit. 21.23. Here net holding right around that 25 cents, up 28%. I put it in media, that link in media on Discord. Too tired to pay attention. I smile. Yeah, it was interesting. It's interesting to watch it. He's a shark though. Like, I don't necessarily think he'd be the best for shareholders. I don't know who would be. I mean, theoretically, no one would be out for shareholders. They just have to pay a high enough price that we get value. So you really just want a lot of demand, right? Doesn't matter who it is. Enough demand to drive up the price. No one's going to pay extra, so shareholders are... Unless it doesn't work like that, I don't know, but my simple understanding. IRT is kind of rejecting that breakout there. Barbecue as well. Up 8.5 still. Spy is doing the ant march. The options are pretty liquid. Maybe some root cash secured puts. I'm quite sure the sell-off. Wait on that. He only can benefit shareholders if he pays enough for the company, though, right? He's not gonna. This just all has to do with the price that they sell it for. It's what's left over is what's for us. You can't like allocate a buyout to shareholders and then not pay bondholders or not pay off specific debts, right? Or do I not understand it? Beyond Meat up 2.5. Keep this squeeze going next week. Hopefully Alt will wake up soon. NRC up 1.5. Am I still in this just ant march? The 24% of Gen Z consumers seek advice from financial advisors. Meanwhile, 34% of Gen Z consumers seek financial advice from TikTok. TikTok? There was an average of 2.6 million US travelers per day over the last week, the most since July 2019. Bunch of revenge travelers out there. You guys all angry on the plane? That's crazy. Starting to move up there. Somehow it's below VWAP. People's VWAPs may be broken. Fill in the gap still. S&P 500 could sink 23% in a recession, so investors should consider some downside protection. 23% would just put us back to where we were in October. That's not even... No, not even. Yeah, like that's right where we were. And no one was saying this was a recession down here. If that 434 is becomes resistance. Americans say it takes 2.2 million to qualify as wealthy these days. More than 1 million college students could be at risk of not earning the bare minimum economic return. I already read that. That would make post-secondary education worth the money. Jeffrey Epstein's victims have formally asked the U.S. judge to preliminary approve JP Morgan's $290 million settlement. U.S. chipmaker Intel said that it has decided to invest up to $4.6 billion in new semiconductor facility near Wrocław, Poland's third largest city. Internet rejected that 25 area. Group Painting holding up good, up at 11%. The sell-off from that news was from 26 bucks, so we better get back up there. Clove is up. GME's down 1%. Johan's green 2.6 now. Hopefully next week. Be better for what, Sergeant? Controls guy, I don't recognize you, and you're in here pumping something. CFC, huh? Maybe I do recognize your controls. The stock's so cheap, why don't we just buy shares? Thanks for sharing the trade. I appreciate that, though. Yeah, you've got a wide spread, high IV, a lot of premium. Mike from Sapporo. Oh, okay. I guess shares just give you so much flexibility with something that's so cheap. I don't know. Got a lot of premium and a wide spreads to get in out of those contracts. I usually, at least for me, I usually try and do shares under a certain price. You know, really less than $10, but definitely around $1, I'd say. Companion up 10.5. As far as going along, I'll sell those. I'll theta farm ones less than $10 because yeah, high IV and wide spreads. Usually get a good wait for a good fill and then a lot of premium. Big lots up 5. Next week for sure for what? Nothing's certain for next week, Jack. 135 end of August. That's not a whole lot of risk reward, is it? Looking for 35 cents. Like a pretty slow mover too. I don't know. Yeah, if you like the company though, you don't mind holding it. Always nice to trade those long. Shit, I don't know what this buy's doing. It's just so slow. You can see the trend it's on. I guess waiting to see if we break out of that to the downside. Set up a head and shoulders or something. Otherwise, we're just melting up. Got a shoulder here and a head. Look for the other shoulder over here. Is that the shoulder? Is that all we got for a shoulder? Or is this just kind of bull flagging still? Could be similar to what we had this morning. This sell-off breakout what we're seeing right here. We're still kind of high enough in this channel, maybe. Dude, freaking browser lag. Gotta figure this out. Odd, like 6 seconds of lag. I think we're setting up a little inverse cup here, maybe. Let's look out for that. Head and shoulders isn't, it wasn't all that pretty. Um. without antivirus. Like lag spikes just on my browser, but I haven't tried that. I don't have anything specific. I think it's just Windows Defender or whatever. I'll try it though. Opera GX gaming browser. I've used Opera. I've not heard about a gaming browser they have. Is that real? Built-in VPN. How much does that cost? Yeah, it is. It does it on Edge and Chrome. Seems like it's better on Edge, but yeah, I'll leave that off for a bit and see what happens. Free VPN. The heck? Unlimited usage on that VPN? Into that. VPNs are sketchy. I hardly use VPNs because they're sketchy, and I'm all limited on them. So only if I haven't used one in a while. I would torrent, would use it, but most stuff I don't need to torrent anymore. Morning, Tasty. Happy Friday to you, Danielle. VWAP, it's so high. MF is up 35%. It was a zip pumper the other day. Mile direct up almost 10% also. Chart doesn't look too bad. Little trend. Barbecue hanging out 2160. Positive 10%. coin's up 1%. One's up 2.5. See if the SPY makes a cup here. We're still in kind of this bullish channel trend. Barbecue coming down a little bit. 21.22. Still up 8.25. TLDR, I don't know. Just their financials. Says the employees, and then cash receipts and disbursements, and then asset and liabilities all zeroed out, which I think just means they're not sharing it. Assets sold or transferred zeroed out. Income statement zeroed out. It's not telling me much, but I'm not expert on reading financial statements. I wouldn't say this move today was from the 8K necessarily at all. I think this started even before it came out. That end, I mean, we were kind of due for, you could see it kind of yesterday in the chart, had that huge sell-off, bounced right on that support, and then just melted up all day back to zero. So, you know, buyers stepped in at that price and continuing on. We're just getting back to that equilibrium where we were. Yeah, browser's running good. We'll see. It didn't do it as often on Edge, so yeah, I have to just try and figure out how I can trigger it. Way lower debt than since bankruptcy. Maybe I'm not. Look, I don't see their debt anywhere. All I see it's filled in is that top, that part 1, cash receipts and disbursements. And this is ending in 5/27, to keep that in mind. So, data ending from like last month. Hey Lords, glad you're happy. Barbecue's back up. 133. Last page? Oh, down here. I didn't even look down here. Highs coming down. Looks like we might be doing that cup, that inverse cup. Oh, that's good. You'd expect their debt to decrease. Cash balance. Cash balance. What does it all mean? What do the numbers mean, Mason? Total receipts. Total disbursements. Total unsecured debt. There you go. Now, is this in hundreds of thousands? So yeah, that's $1 billion. I don't know. What was it before? Wait, yeah, only I thought they had 5 billion. Maybe that was secured debt. Oh, okay, 678,000. Wait a minute. 678 million in secured debt and $1 billion in unsecured. 1.6 total. Is that right? That's way better. Did they have like 5 billion in debt? I mean, given their revenue and income is much lower now as well, but still. That's crazy. They wiped out almost 4 billion in debt just since BK. That's pretty bullish. For the company, I don't know if it's going to matter to shareholders. Swedish? Swedish? Swedish. Beautiful. Oh, squeeze-ish. Maybe part of this rally was from that 8K. Lots up 6. like the value rotation. Okay, SPY's coming down more here. Waiting for the low of the day to probably take a long for the bounce for a handle. If it does bounce. Kind of saw that head and shoulders, but it just didn't quite form how I wanted, I guess. I don't know. Guess it was one, I just missed it. Just real quick right here. People front running the bounce. Barbecue hanging out 2170 up 10.7. So if it was Windows Defender, I have to look up what fix that. Because yeah, maybe it's just like one of my tabs, it's causing it to send a bunch of data back and forth. Just clogging the pipeline. Try overclocking again. That'll fix it. Come on, July. Let's just cheer on the whole month. I think we are actually getting the handle maybe now. Not get a full up. Or we're just trading in a range, so I have to look for a reversal after it retraces some. July is barbecue season. That's a good point. I like that. Got I've got like a tenth of what I had before. Feels kind of bad today. Less than a tenth. Big's up 6.8. That's neat. BBBYQ 11.17. 21.79. Lithium producers are growing anxious that delays in mine permitting. Staffing shortages and inflation may hinder their ability to supply enough of the battery metal to meet the world's aggressive electrification timelines. Kansas City Fed Services activity June 14, previous was 3. All right, EU closed 5 minutes ago. It frees our price action a little bit. Doesn't slow it down. US dollar, Japanese yen rises to 0.4%. Highest since November. We're starting to get a little handle here. Only 2.43% of Americans are currently delinquent with their credit card payments. For the Fed. That is incorrect. By 2030, people over the age of 65 in the US will outnumber those under 18. Here's our handle. How high VWAP has stayed. Increíble. $21.79 on barbecue. Either a handle or retrace all the way back up here and we're just in a range, but still kind of think we're making a handle here. Okay. I shouldn't be muted. Oh, you can hear me. And Tesla today? Just trying to get the little bounce after it started selling off. An engulfing candle 2 days ago. You're building a head and shoulders. Oh, the handle's not done. Here comes Laura. I'm pumping it. Pumping this the other day. It's had a nice trend actually, Laura. I definitely give you that. It's not dumped. It's pumped, consolidated. It's kind of dumped, but it's consolidated. Now you're grinding out more, so that's nice. Iron a double top in there. Or is it a cup and handle? Am I still rallying up here? Well, maybe it's a failed cup and handle and we're just trading in a range still. I don't know. This seems like too far of a retracement for a handle. SPY's ripping there. Biggest green candles we've seen all day. For some reason VOP's still really high. Maybe it's reaching for that. Coin's up 4.3. Good SPY. Well, see you later. Big cup retracement. I'm gonna get some SPY. Get some daily puts. Yeah, I got some puts. Looking to close some at low of day and then let the rest close a little more down here. If we can make it down there. Close out the rest down here. If there's any left, if we make it there. And to the upside, I will stop out on a breakout to the upside. So yeah, I think we could still get a move up to the double top here, and this just ends up being a channel, but I don't want to be closing out puts at the top. If it moves up, retraces, and on that basement, I'll close them. RBQ up a little bit, 21.95, almost 12%. A little bit there. I think this might be too much of a retracement for handle. IRNT back at the highs. Look, it did a cup and handle too. Breaking out there. Where's your cup? Your handle? Boom, it's going. If you can break that high though at 26 cents. Probably will. Got volume on it also. Guarantee 33%. Afternoon, trader. Sideways trading would be if it's at a low accumulation, or it's just being accumulated, then it rallies. It'll trade flat, be distributed, then it'll drop. You gotta sell when it's exciting and buy when it's boring. But yeah, it happens to all of us. There's IronNet, new high, 27.50. Broke out of that cup and handle. About barbecue, Daniel? Yep. It's kind of bull flagging there. I don't know, there's still some resistance right up here. 23-cent range. You see that break first. Companion up 10%. IronNet coming back down to retest that breakout. Holds out of support now. Stopped out on my puts. I had to stop at break even, so yeah, I opened them up second too late. I was waiting on this 1 minute candle, and it made a little head and shoulders, and then the candle didn't quite finish, and then it ripped up. That's when I opened. I'm like, oh, just gotta wait for the candle to close. It was like 10 seconds too soon. Still profitable on it. Came back down, but this is too far of a retrace. I think now it looks like we're gonna just bull flag and back to kind of a chop. Potentially with there's still a gap up there. We could be making a head and shoulders here also. No, I'm still getting that lag. Like a spike of lag. Maybe, wait, hold on. Maybe that wasn't. Whoa, iron net. So retest confirmed. Support. Freaking volatile. 28. Hit 29 cents there. 44%. Might be the beginning of a little trend on iron net. Here. The volume the other day was definitely crazy wild. $0.29. After that, you've got 34. They sit on barbecue next week? Could be. Momentum hasn't really shifted. It's just kind of made this big range. Well, I see the sentiment, but yeah, we're still just in a range. So need a full breakout of this 23 cents, and then kind of just a full breakout would be fine, but breakout and then at least a retest to show that support now. Otherwise, we're still kind of below this shoulder. Bitcoin's ripping. Maybe coin is moving with it some then. Internet. Move up. Whoa, spy pop. What in the world? Weird. Well, I was right at 12, wasn't it? Well, 1. All right, Sergeant. Yeah, Bitcoin's up 25%. What the heck? That's got to be causing the coin rally too. Yeah, coin's ripping because of that. Almost 6%. Getting back up to the high today. $0.29 on IronNet. GME still down 1.5. Yeah, all the crypto stocks are rallying. Mara's up 8.5. Big is up 6. Big's up big. I kind of rejecting VWAP. Companion breaking out maybe. Up 11. Yeah, I think it might be in a longer trend. I like it. The channel tells something it will rip. It's the channel just for buyers. Doesn't matter if it rips. You made money on it and you had a plan, you stuck to it. That's what matters. Trying to time the top. Gonna get wrecked. 25 likes on the day. Thanks, guys. Coming up on noon hour. We're actually just past noon hour. If you haven't subscribed, do it. It's noon o'clock. Turn that red to gray. hit the subscribe button. We're here every day. Can't tell if turning off the defender helped my lag or not. Okay. We have an RSI divergence there on IronNet, so that might be the top for today. Tried to short it. Let's see if I can do it. I wanted to do this the other day when it was up here. I don't have a buying power on this account. Well. And it's coming down there. Back to VWAP at least. Might be a good dip buy though. Looks like it's in a longer term trend up. Barbecue holding up here. Has made a nice bull flag. 12%. 21.99. And still reaching for the sky. No, I still get the spikes. C's down 2.4. All beyond woke up 6.5. The squeeze going beyond. SPY setting up an engulfing candle there on the 5 minutes. See if that holds. Barbecue breaking out maybe. Barbecue to go. There it is, barbecue breakout 2240, 14.3%.
.7, their month over month 0.7. They started later than us. They went slower than we did, and they're behind. So they've got some issues over there. But here, Tom, you know, it's interesting. Janet Yellen was speaking in Paris, and she was talking about she doesn't see recession coming in the U.S. The U.S. economy is doing pretty well. Okay, someone explain crude oil to me then. Crude oil is telling a different story for the overall world economy than a lot of people are talking about.
Demand going down,
exactly.
Possibly, yeah.
I mean,
New high of the day there on barbecue, 2250.
Right? Japan has been consistently dovish. They've never even entered the neutral camp. And you've got crude oil plummeting here below $70. I think there's warning signals, maybe not from the U.S., but from around the world.
Oh yeah.
Warning signals.
Borrow fee went up to
Joe.
82%.
Look at the S&P 500. Yeah, it's fallen this week so far.
Form another inverse cup.
From overbought levels on a technical side, and with forward-looking,
forming a normal cup.
19 times in the S&P 500. That's historically
testing this high today.
in an uncertain environment. Does that worry you? Are there any levels in the S&P that you're looking at, because it's still far above its 50 and 200-day moving average?
Yeah, the borrow fee went up a lot more today. 66% to 82%. They're running out of shares.
Expectations, right? I mean, if we were talking a 19 PE and we were still trading at, a 6% CPI.
See what happens when we get up here to 23.
Now that we're at around a 4%
and ripping up there. Us through VWAP.
You are kind of skewing towards the higher end of the range. But here's the one thing, guys, that I think we always need to kind of look at when we're looking at multiples in the market. I think they make sense when you look long term, and you can kind of take that look back, right? After a couple of years and say, oh yeah, well, we were at a 1950
was the high on barbecue,
but it can stay high for a while. And the rotations that we see, why is it high? Well, the reason that it's high is because when you're looking at the overall market, the leaders
22s.
still are concentrated. And
finally waking up here, pretty legit.
For the most part, even though
starting to rip up,
some of their PEs
filling gaps.
They still are high relative to the overall S&P 500. The other thing I would pay attention to, guys, is the percentage of winners relative to the S&P 500. A couple of weeks ago, we had gotten to an area where there's only about 15 or 16% of the S&P 500 that were actually beating the index. That improved a little bit over the last couple of weeks.
Wow, dude, look at this SPY just wake up out of nowhere.
I think that helps a little bit in the breadth, but that's still relatively low. I mean, it's very low historically. And then when you kind of look at percentages of stocks above their 50 and 200-day moving averages, when you're looking for some of that market breadth, that had been improving, but this week that dropped quite a bit. We're around, I think, 50 and 52 in the S&P 500. And then when you look at the Nasdaq, it's even more so of a case of some of that breadth deterioration. You're at around, I think, what is it, about 42? About 42% 42 in the above the 200-day moving average, and about 48 above the 50-day moving average. So once again, it kind of goes to that idea of
Getting a
the
totally
generals
different
are
reading on
leading.
E-Trade than I am on Webull right
Are the
now.
soldiers going to catch up, or are the generals just going to continue to push forward? I think that can last for a while, but at some point you need to get that breadth expansion below. Yeah,
and you almost hope for that rotation as opposed to people just getting out of the winners, maybe in the Magnificent Seven, big tech names and that. But Kev, real quick here, we've got data coming up next week. Yeah. Earnings kind of drying up, but we got a couple big names. What are you focused on?
Next Friday,
that's
personal
about.
income and outlays. We'll get that core PCE.
Yeah, E-Trade says at 10%.
Looks at durable goods on Tuesday.
Webull says at 12.3.
Sentiment on Friday, consumer confidence on Tuesday, more housing data, but definitely income and outlays on Friday. Because, like I said, that's another look at inflation.
Yeah, it says the price is the same, 2201, but it shows the percentage is a different amount.
It's a little less volatile. So, yeah, but
did they get different opening numbers? That's the only thing that would make sense.
Yeah, GDP, of course,
look,
on
10%.
Well, so, yeah, but income and outlays is the one I'm looking at. Really.
Yeah, GDP I think is a final read on Q1.
Underlying price 2201. Underlying price 2201.
And those consumer
it says plus 12.3%.
Have been improving also as the market has made some leeway here in the month of June. All right, guys, let's take a quick break. When we come back, we're going to take a look at Uber. The rideshare company
Uber.
is at a 1.5-year highs and up about 76% so far this year. The silent move
E-Trade's been off.
Higher in Uber.
There now. Right, yeah, for some reason, I've not seen that yet. Webull and E-Trade have been consistent. Been consistent for me. What I've not seen before is the price the same, but the percentages are different. I've never seen that. The charts match, percentages don't. Yeah, percentages don't. Even the price matches. Why not slowing up? Thought we were doing a cup and handle, but no, it broke through that cup. What's it waking up here? Weird how high the VWAP was today on SPY and has stayed high. Retesting VWAP there.
Ask Jenny Horn, ask Oliver. Ride-sharing is back. Ride-hailing is back.
Yeah.
Right? I mean, the numbers are skyrocketing for them. But now, they still got to find a way to be profitable or get to a sustained level of profitability. I mean, they relied, during the pandemic, they relied on food delivery, right? That helped them, and it's still helping them. But ride-sharing is now back to its to a leader in terms of revenue. But they are so bullish on this autonomous robo-taxi. and their deal they signed with Hyundai and Aptiv for the robo-taxis. Someone just has to answer me this question. They think they're going to save a bunch of money when they take out the driver, right? But when they take out the driver, you also take out the car, right? He brings a car with him. You got to buy the car.
Right.
You got to still do all these things. How does that? Someone has to explain to me. I'm sure it does save money because everyone's excited about it. It doesn't seem like it does, though.
Yeah, and to that point, Joe,
AMC's down
this is
2%.
an asset-light model, right? They don't own anything. They contract the
Live
driver
retesting
out.
VWAP, and
You know, this
gonna
is,
keep going
you know,
probably.
it says something about that, but to Kevin's point, ridership's really picked up. People are traveling. You need that Uber to and from the airport. Those are skyrocketing in price also.
Yep,
But
here it
just
goes.
seems
SPY
like
continue to fill the
demand
gap. That was
continues
kind of
to outpace expectations.
pretty big
where
level.
they're almost
434.
profitable on a consistent basis.
Look, they're benefiting from that, dynamic shift from goods to services demand.
434.40.
Talking about now for a year, right?
435 is
in the
next
Q1.
big resistance.
They beat earnings consensus by a penny. They had mobility gross bookings up 40% year over year, delivery gross bookings up 8% over year over year. They're helping their margins. That's helped quite a bit, and they're expecting EPS growth in 2023 up 100%. And then carrying forward into 2024 up another 100%. So the growth expectation is there, and if you extrapolate that out, longer term, analysts are expecting about a 5-year earnings per share growth rate of about 44 to 45%. To the tune of, Barclays even raising their price target on the stock to 57.45. They are starting to kind of hit on all cylinders here. No pun intended there. But I think when you look at the stock itself, and this is where sometimes I think we need to take a step back. I think a lot of times we say, well, it's up X, or it's moved X. When you look at what's happened, and maybe we don't need to concentrate so much on year to date or in the last year, but just kind of take a look at what it's done relative to its sector peers. I think this is important, and kind of the medium term. It's up about 11% over the past month, and that's up over relative to its peers that are up about 2%. Longer term, right? Their price metrics, they've increased 42% over the past quarter, and they've gained almost 100% in the past year. So maybe we don't look at that and say, well, it's overbought because it got to that level. Remember where it came from. I think that's important as well, too, especially kind of with what we've seen in the tech rally as a whole this year. I think we spent a lot of time talking about the fact that we've had these big moves, but I think we also need to look at, the base and where things came from. The other thing that I'm paying attention to from a technical level is just kind of looking at the volume on these up days. The 20-day average trading volume right now.
Bitcoin's up 30%.
So that is maintaining a good level of volume even on this upward move. You're not really starting to see that volume dissipate.
What happened?
As the stock is continuing to push forward. That's another technical sign. That tends to be bullish, at least in the short to medium term, because you are starting to see some momentum behind this name. Which potentially could carry forward. I think, where we're at right now, just shy of 44. We're kind of pushing back to the January 22 highs. If that's something that we can get above, the stock potentially has some room to run.
Yeah, taking market share from Lyft. Its competitor is negative this year, and then they're doing some cost-cutting measures, which is helping. But Joe, you've got an example trade for us in here to take advantage of some upside movement.
Yeah, no, I do. So I started off by kind of looking, at the technicals, and I said, okay, what would happen if we kind of start to break above these levels? Where could we go potentially? And then the second thing I always do when I'm looking at an options trade is
I'm not seeing any news for the Bitcoin rally.
Is it worth selling puts or buying calls? How do I make that determination? Well, when you're looking at the implied vol percentile of around 17 to 20%, that tells you that you're in the real kind of lower quartile of where implied vol's been over the last year. So selling options isn't necessarily a great recipe when you're in that lower vol environment. So what I looked to do is I said, okay, I wanted to put together a diagonal, basically buying the July 28 expiration, selling the July 14th expiration. I want to buy the July
cup going on here on barbecue
calls and sell the 46 calls.
And I made the handle right here.
what you
I
could
have an
almost
internet
could
breakout here
consider
in a
a covered
second.
call, but instead of owning the shares, you own the in the money call, and in that example, that's the 43 strike, which is in the money right now, slightly in the money by about 70 cents or so. But this gives this trade an opportunity to kind of expand over the next month or so. It keeps you out of the earnings cycle. So the earnings is expected to be on August 1st. So this trade would have expired by that time. And it looks for kind of that push back up towards those January 22 highs if we can start to get back up there. Right now, you could probably do that from somewhere between $1.65 to $1.70. Where does this expand to its max gain? Always think about it this way, guys. When you have a spread on and it has two different strikes, you want to move towards that short strike. So in this example, you want to move away from the 43s, pushing up towards the 46s. That's where you see the peak right there in your risk graph, in your profit graph there. And if that's the case, if you can do that within the next couple weeks, then this
I think
is a
this chart actually still looks pretty good.
$165 for that could
I don't like that engulfing candle, but
something close
holding
to
up a nice
double,
level.
you can get a roll in there as well.
All right, yeah, let's break this one down. Buying July 28th weeklies, 35 days till expiration. The 43 strike call, that's currently at the money. Then selling the July 14th weeklies. Those expire in a couple weeks. The 46 strike call, so $3 wide bullish call diagonal to the upside. You're only paying about $1.67 debit. There's your risk, $167, Kevin. But to Joe's point here, it's only a $3 wide call diagonal. But you're paying less than the width of the diagonal. Also, you've got that option to roll or adjust that short strike if market's open, liquidity is provided.
Still climbing.
Not a big capital intensive way to take a bullish stance here.
Yeah, the best thing we can do in this segment is to teach the people watching the show about the strategy. And the strategy is, it's something in the calendar spread family, but it's energized by the vertical within. You can move the strikes around. You can move it out further if you want more vega, that long side. But it's that 31 deltas you get. You're not going to get that in any calendar spread. But that's where the diagonal does it. Kicks in that delta, which gives you more upside exposure. You see, it's got virtually no exposure if the stock were to go up higher. Right. So this is one, it's collecting a little bit of theta yet. Maybe that'll pick up as you get closer to that
SPY just gapping
expiration. But this is one that I would encourage people to play with. Use the Analyze tab and play with it and the risk profile. Move the strikes around and see what you like and get that idea, that visual look at what the diagonal spread is. It's a great way to use the risk profile to do that.
Right, and then also earnings are at the beginning of August, so Joe set this up to avoid that earnings.
It was that 1 minute mistake got me out of my long into a short.
Added volatility in that
right here, not waiting for this candle to close.
Expires right before that 35 days till
this was a head and shoulder. Last 10 seconds, I opened the position, closed and opened. Closed along, opened short. This thing ripped up. Didn't make the head and shoulders. Showed just as a bull flag. Otherwise, I'd maybe still be in that long.
Stick around. Fast Market's coming right back.
Barbecue's at the resistance. We'll see if it breaks. Run might be setting up a big inverse head and shoulders here. Had this RSI divergence, it was bullish. Had this steeper channel, was then turning into less steep of a channel with these two tops. Had the breakout of that resistance. Now we're looking for it to bounce here, which just so coincides with this shoulder over here. I freaking rally. Like a Friday pump on the SPY. Hard to see with all that chop this morning. Really threw it both ways. GME's even waking up from it a little bit.
growth is Cash App. So when you look at all of their different properties, you can see that Cash App is up slightly. I think it's up about 3% on a year-over-year basis when it comes to mentions, whereas Venmo is up about 5% on a year-over-year basis. So, Cash App is leading the way among its brands, and some of the others are really falling behind. Even Square, which is the one, that's a big one. It should be doing better. It's down about 14% on a year-over-year basis. So Cash App is kind of the only thing they can talk about when it comes to success. They claim that they've got about 53 million monthly transaction activities as of March 30th, which is up 17% on a year-over-year basis. I know that there's some skepticism in the reporting of that, and you don't want to hear that, obviously, but that is the case, that maybe those numbers aren't completely accurate. I'm not sure how they measure. I'm not making any accusations, but I've heard that. I think that's a sticking point for some investors. The other thing is, Cash App, generally speaking, has lower income users, and if we go into a recession, you're going to have those users are going to be less active. It's going to be harder to attract. So that's another potential problem. But just looking overall at sort of the trends that are backing all of this, right? So you're talking about people buying cryptocurrencies, people interested in digital wallets, e-commerce, even buy now, pay later. If you want to talk about their new acquisition, Afterpay. Crypto and digital wallets are up. That's sort of their strong suit here, which is why I think Cash App is leading the way. E-commerce down, so Square's down. Buy now, pay later's down, so Afterpay's down. But when you look at trading crypto on Cash App, you can buy Bitcoin or Bitcoin Cash. On Venmo, you can buy those too, plus you can buy Ethereum and Litecoin. So Venmo has a little bit broader offering. The happiness of the two companies, or the two apps, are basically identical, but Venmo is actually growing a little bit faster. And right now, when you look at the total market share of Cash App versus Venmo's sitting right about 55%, Cash App's about 45%. So Venmo's winning and expanding their lead. We actually went bearish on Square or Block back in April. Officially bearish. We sent out a notice to our hedge fund clients that we just don't love the trajectory of this company. So, everything that we've got is kind of ho-hum at best, but a little bit pessimistic at worst, depending on what you're looking at. So, while I do, in general, like the company, I don't like how they're handling competition. I think that Venmo is starting to really do well against them. Even Zelle is starting to catch up somewhat. So Cash App is pretty much all they've got to hang their hat on right now, and it's falling behind the competition. So I don't love the company where it's at right now.
Landon, this Hindenburg research piece that came out about Cash App and their inadequate safety controls on this, it was a death blow to this. And they're trying to get back up. They came out with some rebuttals and they put up some good numbers.
Hindenburg going after him again.
And I think the
strikes again.
Remember, I think this is a wonderful company when it comes to the Square ecosystem for merchants. I think they do an incredible job. You see them in small businesses all over, but the Cash App is where it was such a great high-profile tool when it came out. But boy, its reputation is just sliding. And I'll throw in one thing. How about the Apple Card? and Apple Pay and the Apple Wallet that's on your iPhone. That is a big competition for not only Venmo, but Cash App as well. And I'm a dinosaur. I'm 100 years old, and I use the Apple Wallet and Apple Pay for some things. So I think there's real competition out there that hurts this company, and like bad news all around it is just one more thing. This stock is heavy, Landon.
It is very heavy. And, you guys were just talking about Uber and how it doesn't have any assets. Similar here. I mean, this is a technology play. And the thing about technology companies is they can rise and grow extremely quickly if they are the leader and if they've got fantastic technology. But the opposite is true. If a competitor comes out who's very strong and has a better technological platform, it can take away market share from a company extremely quickly. It goes both ways. It cuts both ways. So that's a danger. And I think that investors are aware of that, and they're just getting a little skittish. You look at the NASDAQ, like I said, up 28% on the year, and a technology company in there is flat. That's just frustrating, and you're going to start looking for other places to put your money. And frankly, I think there's a lot of better places to have your money, because not only is the company just not performing that well, even though I
Couldn't ask for below the stock price.
Platform. I even like Cash App. But
Lords, why are you sad again?
The key is, though, the competition is
Barbecue's up
coming
14.5%.
It's not just
22.40
PayPal with Venmo, but like you said, there are others like Apple. You can name 3 or 4 companies you don't want to compete with. Apple's on that list. So yeah, that, and plus you've got Coinbase. If you talk about buying,
need this to break out and use that as support.
Someone else is doing a little
Doesn't have to today, but
and in technology,
so far we're still in this just range.
And they're dropping.
Yeah, when you look at the happiness levels, it sounds like you're more tilted towards
basically to say I wouldn't buy it right here.
Side here. But Landon, do you guys have anything about
You're either going to buy it higher or buy it lower.
The CEO Jack Dorsey, it seems like he can build a good company.
You're showing 11%.
It seems to kind of deteriorate. We saw that.
He trades showing 11% also.
It just doesn't seem like
I don't know, dude.
Cash App as much as I used to. And maybe
they're actually showing a different price right now also. Webull might be lagging. Sometimes Webull lags.
He just doesn't know how to extend building that great
Hey, Cameron.
company out.
Oh, it's just
I think that's
just continued momentum from yesterday's bottom.
Right? I mean, I don't know him. I've seen
Probably picked it up
his work
yesterday.
with Twitter. Fantastic job. And
Had a nice double bottom. Nice show of support at that level from back there.
You kind of drift away a little
Just
bit. I think
continued
the
up
same kind of
quickly.
thing here is happening,
They also
where he's
released an
amazing
8K, which could be some
80-85%,
contribution to this.
and then when it gets
Not
to
sure.
that top
But
level,
we're not out of it yet. I mean, we're
maybe
not
loses
bullish yet,
interest,
in my
or maybe
opinion.
he's just not executing as well.
We're just back up to
I
that
don't
shoulder
wanna
again,
get into
so
personal stuff, because I think he's done a fantastic job. But
we've
yeah,
basically confirmed
I
a
agree
range
that
here.
It doesn't have the reputation that some other
Need
CEOs
to
have
break
of just
and
flooring it and taking it all the way. So
retest, or
there's
just break and
definitely
keep
the
going
concern
from here.
there. And after seeing what happened with Twitter and the changes after Musk took over, it's like, well, maybe Square could do better under different leadership.
8K.
I'm not sure, but yeah, it's definitely a
I
concern.
think we were rallying
I
quite a
think
bit
so.
before that
3
anyways,
million
but
monthly Cash App users,
it could be some of
last
that too.
quarter, so they've got
Was
their,
that that surprising though?
They're in the game.
You
The
made a
1.6
point.
billion in
There's
debt?
a theory out there. There's people that have unbelievable ideas.
Yeah.
Or no,
but
it's
they're-
more.
they
Wait.
lack in that
Or no, yeah,
day-to-day
1.6.
discipline of
The
operation.
Total
execution.
funded at
Exactly.
1.7.
We all know people like that. They
Yeah.
come up with these great
Yeah.
ideas, but they lack in that ability to bang out and grind the
Yeah.
day-to-day stuff.
Yeah, you wonder if he gets a little bit tired on that.
You also
All
have to look at
Landon,
their-
great data as always.
Their
Appreciate
income
it.
now
Great
though, it's so
weekend.
much lower.
Thanks, you too. Take care.
All right, that's
So
Landon
relatively,
Swann, co-founder at
they're probably in a better
Fomo,
spot,
joining us,
but
breaking down the data. Kev, how do you want to look at this one?
not
from
by
an
maybe as
example
much as people are
trade
thinking.
perspective?
They're
It
not
seems
doing
like
over $1
we've got
billion
some deteriorating data
quarter
on
in
the
rev
portfolio.
anymore.
As I mentioned, the S&P 500 up 13.5% this year. This stock's been flat. It's been in a downtrend for the last 2 years.
Yeah, I did something bearish, not very crazy bearish, but I saw this 58 level on the chart. It's kind of interesting. It's only about $5 lower than where it is right now. So here's what I did. I did the 60. I went to July 21st. The earnings are August 3rd, so staying safely ahead of their earnings. And I did the 62.58. Right, so $4 right down to that 58 level, and then I bought it's in the butterfly family. I bought one 62 put,
Butterfly?
sold 2 of the 58 puts, bought 1 of the 56 puts. So $4 wide put vertical, $2 wide put vertical, spending right around $1 for it. Actually, it's crept a little lower than $1, Tom. But this insulation, if it goes right to 58, is where this maxes out. But even on the downside, you're insulated from losses on the downside. It just your profits weaken a tad bit. But this is something mildly bearish in there. I would say do something like this or don't trade it, Tom.
Yeah. So in this example trade, the unbalanced put butterfly buying one of the July
He's down
monthlies.
2.4%.
These expire in 28 days.
$4.07.
Puts, buying one of the 56 puts, paying roughly about $1. We've got $1.05 on the risk profile there. That's where it was trading earlier. But the debit you pay
Ape is up
is going to
1.6.
be your risk. On this example that we've got up here, takes your break even just below $61 on this one. And even if it does go below that 56 strike, it's still a double as far
climbing
as
up.
profitability, but the apex being at or near that short strike, which is 58 at this point. But a good look at a bearish unbalanced put butterfly. And by making it unbalanced, you've only got one break even instead of two and an equidistance butterfly on this one. But this one sets up with like Folio's data as an example. All right, Kev, let's take a quick break here. When we come back, we're going to take a look at another stock in this fintech space, and that's going to be PayPal, also underperforming the overall market so far this year. Fast Market's coming right back.
Yeah, no, it's a huge reduction in debt. 5 billion to 1.5, 1.7. Company's definitely messed up, yeah. Brought in over 500 million between April and May. So they're going to have a boost there because of the liquidation, right? And all the sales that they've been pumping. Because that's not even normal on a normal year. If they're doing over $1 billion a quarter, unless that's typically a really good month for them. If they were to keep that up, then that's still over $1 billion a quarter easily. I think that was just a boost from all liquidation.
The financials, we can see that.
No, you're talking about annually.
That industry group this last year, and I think PayPal.
Yeah, you're talking annually.
Block,
Quarter,
as it's called now,
1.19, 1.2, 1.4.
Past few
Q4 of 2022, they did 2.
PayPal, from a balance sheet standpoint, looks rather impressive. They got $10 billion in cash. Now they're raising an additional $1.8 billion by selling their $44 billion European buy now pay later portfolio to KKR. And one of the things about PayPal is they're utilizing about $1 billion of that to continue share buybacks, with now in total by the end of this year totaling $5 billion in share buybacks. So overall, the growth of the company is still significantly below its 5-year average, but its multiple is as well. It's only trading around 13 times forward earnings, where historically it's around 27 times. But growth rates for PayPal, both in sales and EBITDA, are now below the double-digit mark. It's about 8% and 6% respectively.
George, quickly. This company, you're right, it generates a lot of cash flow. It has a lot of free cash flow. It's got a $71 billion market cap, not a lot of debt, right? Cash or payments, online payments, electronic payments, not going away. But George, here's quickly. How do they compete with Apple and Google going forward on their own operating systems? I think, our job as traders, we have to see the clouds before the storm, or the storm before the clouds come. And how's the future for this company if they can't compete against these companies?
So I think this is an excellent point, Kevin, because you have to think about the competitive landscape for the fintech and payment services industry.
Big Lots still going, 7.6.
Right, because PayPal is an application on their platform.
Guarantee building the Head and Shoulders now.
Can create some anti-competitive challenges for
PayPal,
PayPal, but Apple has to be
11.3.
very careful in not essentially allowing PayPal to operate
Beyond 5.9.
On their
Beyond Meat, that is.
platform. I think if you look at the EBITDA
Basis
for PayPal
holding
on
up.
a forward basis, it's even less than last year. And that might be based upon estimates, considering some of the aggressive challenges that Apple may present to companies like PayPal.
Groupon had a nice bounce on that 50 moving average.
If you look at the valuation,
I like that
about
trade,
a third
though.
of the 5-year average. Its growth is about a third of its 5-year average, and I think that's why, effectively, there's more of a neutral stance on the company stock, considering Truist actually reduced their target to 80 from 90, but they still maintain a buy rating because the financial position of PayPal is relatively sound.
Yeah. All right, great stuff. As always, great background for us here, George. Appreciate it. That's George Tillis, Senior Markets Correspondent here on the network. Thanks, George. Kevin, I looked at this. The stock just went above its 50-day moving average. It bouncing today after falling back below it. So that 50-day moving average seemed to be a good base here. So the opposite of what you looked at kind of in block based on Lake Folio data, I did the opposite because they're more bullish on PayPal. So we looked at a strategy in here, avoiding earnings. Earnings are on the 2nd of August or so, so wanted to avoid that earnings risk event in there. But I looked at just buying a call vertical to the upside, as opposed to Kevin looked at the put butterfly on the downside there in SQ. On this one, went out to the same July 28th weekly series, so 35 days till expiration. Buying the 67 strike call, which is currently just in the money, and then selling the 73 strike call. So a $6 wide bullish call vertical to the upside. You're paying a debit of roughly $2.30. That can expand to $6. The move that the option series on the July 28th, Kevin, is plus or minus $6 move. So that's kind of why I set up a $6 wide bullish call vertical. But the risk or the debit that you pay is your risk on that $230. Your take here, pretty, two-legged spread. It's not overly complex, but there's still risk in this one.
Just like Joe Mazzola's spread in the diagonal, how do you get to around 30 deltas, right? Which is what you got here, what Joe had on his. This is just using the same expiration for both versus Joe chose the diagonal. It's two different ways to get to the exact same spot. So, this is one. It gets you 30 deltas. You're spending $2.30 with the chance to make $6. So it'd be almost a triple.
Yeah, and you look at this, Kevin, the break even there, 69.30 to the upside. That's about $1.30 above the current share price. So it's not like you need an outsized move. And when you buy these, you can actually, if the market's open, liquidity is provided, and say, PayPal goes up to 72, 73, this thing starts to expand to $3, $4, or $5. That's maybe when you can do some trade management, maybe closing.
One last thing, use the tools like you did on the Thinkorswim platform to help you with strike selection.
Yep. All right, great look at that one. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the network. Next Gen Investing's coming up.
An engulfing candle there on the 5-minute. But we've put it up against VWAP. Barbecue just hanging out at 22 cents, 22.20. Up 13%. Iron net. Form that down to the neckline of that shoulder. .24 Exchange, which is backed by Steve Cohen, will shut its spot crypto offering. Jedi.
Alongside Alex
Aw,
Morgan.
snap.
We're seeing yet another day of weakness, but today throughout the board, yesterday we did see
Get some
actually
Jennies in the
Nasdaq
chat.
S&P break that losing streak, but we're lower today. To
He's
close
here to
out
teach you a
what's been
lesson.
A relatively quiet and somewhat disappointing week.
Disappointing but quiet, I think, mostly. But it is Friday, a little bit of weakness, but it looked a lot uglier earlier today. Got to be honest, at least half of the losses basically being trimmed here. This is about as positive as today has looked, given kind of the nature of this week.
Earned dead right now.
A little bit more red. It hasn't been a lot of red, but it's been more red than we've been used to seeing the last month or so.
And with the lack of really movement throughout the markets, we've had to get creative with some of our movement.
Time at May 7th. This filing shows the ending was in
Today, we'll be kicking things off here with our upvote and downvote segment. Following that, we will chart and trade those upvotes. Our FOMO discussion today is all things Celsius, as it did touch a new 52-week high earlier in
Oh yeah, I guess that is May.
Then we will look at the social
Yeah, it's only a
media
month ago.
stocks and seeing how they're being impacted by TikTok broadening its in-app retail offerings. Last but not least, our under 30 name today is Applied.
Yeah, they canceled the gift cards. Yep. No, I know. They gave like a week notice. If you have gift cards, you've only got a week to use them. That was part of the pump why everyone was in stores. Gift cards, credit cards, refund receipts or whatever. Like, yeah, they took a bunch off their balance sheet just getting rid of all those. Hey, I'm not the sucker. I got a new coffee machine. We use that.
It's kind of like in the sports talk world where they get the Mount Rushmore season, you know, the heart of the summer. They got nothing to talk about. Who's better, Michael Jordan or LeBron? Are we at that part of the market? I'm not so sure, but the equivalent might be market-themed shows, and so we're getting to those points where we gotta dig deep to find some interesting things. But we've done our best. We got plenty to get through. You mentioned some of those individual stock stories. Excited to talk the social media companies towards the end, and of course, FOMO is always great. Celsius, a company we've talked about a lot as of late. But let's do some of these consumer stocks here for upvote, downvote. A little bit of a theme here. Consumer stocks, though, being about as broad in terms of its interpretation as it could be, because the first one here is Uber, and it doesn't have a ton in common with some of the other ones on the list.
It doesn't, but Uber is one that definitely, I would say, has had a nice year, still up about 75%. And actually, despite the lower market we're seeing today, look at all of those green arrows across our upvote and downvote stocks. So that's at least a positive here.
Oh, you have a stores doing 60% off now?
Today, Barclays did raise its price target.
I don't think I've seen any that.
$57 a share.
The local one here, I think, is mostly just still like 20 or 30% off.
Outperformed, and there is more upside from here even. They see a longer-term path to around $70.
Up here on the 904 designation creditor.
Uber as a company did announce slashing 200 jobs in its
that comment that I think Juice shared on Discord was kind of interesting though.
I mean, it's only down about 1% off its 50
It called the courthouse and
from its low. Now, when you compare to Lyft,
said it was because he was in a civil court case.
On the year. But I will say, Alex, anecdotally, recently Lyft has done
and it's automated, all that stuff, so it's triggering.
So much cheaper than Uber. I was Ubering to my parents in the suburbs, which is usually a pretty hefty Uber, and Lyft was half the cost. It's amazing.
It can be, especially if you're looking for the price being, especially on those longer trips, I subscribe to the Uber one, and I haven't really looked at Lyft ever since, because I feel like once you buy the subscription to something, you feel like you got to utilize it. But these are competitors. One has clearly done better than the other, but it also is doing more. I mean, it's doing some of the logistic stuff. It's doing, of course, its food delivery business as well. So
I didn't know Uber had a subscription business. That's good.
Is a name that is very much in this next generation kind of world. A name that we kind of grew up alongside, I would say. I mean, I remember this coming
unlimited or so many trips per month.
Company, but as a service, at least where I was, like when I was in college or at the end of college, and it just was a game changer. And so Uber has always been one of those services that I think we know dearly, being in this sort of millennial generation. For that reason, and plenty of others, particularly this analyst note as well. Gonna say upvote for Uber, a name we haven't talked about in several weeks, it feels. Chipotle next on the list. This is another name that, I mean, this is like the millennial diet right here. Chipotle, maybe get it on Uber Eats.
Gosh, no kidding. And Chipotle sounds pretty good right about now, but this name actually the worst performer of the group. I spoke too soon. Now we are seeing that name slightly lower, down about 0.2%. on the session. But some positive analyst news today. KeyBank did raise its price target on Chipotle to $2,300 a share with an overweight rating. They do see sustained traffic momentum, pricing power, and improving flow through as inflation on avocados and chicken specifically remains tame. I like that they called out those two products because I can imagine that Chipotle goes through a good amount of avocados as well as chicken. But they also believe that Chipotle's digital capabilities, its brand positioning and marketing and innovation expertise, as well as its best-in-class unit returns, offer a unique level of resilience that's worth a premium relative to its peers, which it is already trading at, to make the argument there. I mean, shares are up almost 50% on the year. It's up 60% over the last 12
Little
months.
VWAP flush there on SPY. See if we're setting up
a
Head and Shoulders here.
Still expecting to close out this week ever so slightly higher. They have been one of the strongest performers in the overall restaurant space. The closest competition, I'd say, is like a Shake Shack in terms of performance, but names that have fared quite well, despite that we know.
Yeah, the cost per hour went up to like 80-something%.
Have been consistently hot in the last couple of consumer reports we've gotten.
Yeah, borrow fees at 82 on iBorrowdesk, and shares are.
And I think it's just a very
Yeah, they were out of shares.
Loves Chipotle. I do know.
I mean, this is iBorrow again. We know they're not out of shares, but.
Well, you know, the one thing about Chipotle is that it's
82% and no update since 11. So.
Price, but it's also kind of consistent in the experience that you have. Whether it's a in-store order that you have in the store, in-store order that you
Currency cards by Card Smith.
Order, delivery order. The
what is
amount
that?
of time it takes to get your order, the quality of the order, the type of food that you're getting, it's always consistent. It's relatively efficient and has that perception of at least kind of healthy. You know, I don't know
trading
if it's
card
entirely healthy, but you know, as the consumer has become more health conscious and fitness focused, something like Chipotle, relatively bare bones. You know,
you just got these as an investment.
For many, it's hard to make that, you know, extremely unhealthy. I'm sure. I'm wrong in some way on that, but we're keeping this very high level on that analysis.
I completely agree, and it's customizable. So you can make it
the Bob Ross trading cards, that's dope.
With this particular analyst, though, I think this is a situation where Chipotle just caught up to the analyst stock.
Is this something new?
They adjusted. Eric Gonzalez over at KeyBank. I think it makes sense if you're not.
Why do you think this is going to go up in value?
The ego on you.
Really, really expensive. We talked about this name not that long ago.
Ace, thank you, sir.
I'm literally just saying per share.
Throw your boat, man. We know you're a lurker, dude. Come on to the chat. You've been sniped. Appreciate it, Ace. Come give Papa Ace a high five. Throw your boat.
For that reason, we'll say downvote. Next one on the list is Wayfair. This is a name
you owe it to him. Robin Lee, you've been gifted a membership. Make your way to the front aisle.
During the pandemic,
thank you, Ace. Appreciate the support, man.
And then it was like we saw the home improvement trends dissipate. And I don't know if I've looked at Wayfair in like 6 months.
I was thinking the same thing. This was actually one of the best performers in its discretionary space.
Pull rare Halo Bitcoin card.
It surged. I mean,
Litecoin.
astronomical
Oh, is that where I was?
Really suffered.
I was seeing someone on Superstonk find Ether. I don't think it was on these cards though.
But now it's up actually 75% on the year. So this name is all over the place. It is down 24% off its high, but now up 105% off its 52-week low. Also holding out well above its 50 and 200-day simple moving
I don't know
if
I think I have enough speculative assets in my portfolio to not be buying playing cards or trading cards. Thanks, Ace. You even sniped someone I've never even seen. Totally new name. I love it. I love saying throw your boat. Throw your boat. I think Papa Ace, while you do it, give us a thumbs up. We're at 27 on the day. Just past 1 o'clock. Got Jenny teaching lessons. So sit down and shut up.
Bottom in Wayfair to see that they'll get a huge benefit is it an interesting take, I will say, on the bankruptcy of Bed Bath & Beyond. Now, I will say of the analysts covering this name, it's fairly divided. 38 analysts, 12 buys, 21 holds, 1 underperform and 1 sell, or 4 underperform, 1 sell. So it's definitely leaning slightly more positive, but the all-in-all conviction of the analyst community seems fairly neutral on Wayfair.
2 things stuck out to me on this. First off, we just hadn't talked about this name in so long, so the fact that it had sort of news like this, I think made it a little bit more interesting even, though the report on its own, which is the second piece, is fascinating. I'm with you. And the reason is because of the thought process. Essentially, we start with a headline, we start with the situation, we start with Bed Bath & Beyond not being in basically the game anymore. Okay. The next thing is I wonder what that does to search trends. I wonder who's going to potentially get more clicks on Google or some type of competitor now that Bed Bath & Beyond isn't getting some of those clicks. They see from their data or their checks that they do that Wayfair is one of the companies. Okay, well, if they're getting more clicks, usually that means more sales. And so they're doing kind of the second, third level thinking. That is really what it comes down to. Generally what markets are is, hey, we start with something, how do I act on it? So I don't know if it's right. I haven't obviously seen their data. I don't know what they're looking at exactly. But the thought process, I think, makes a lot of sense. And so I'm excited about this one. I think it's fun. Michael Morton at MoffettNathanson upgraded it to market perform, as you said. Price target's 44. Well, it's way above that already, so we'll see where it goes from there. But I am going to say upvote on W because, quite frankly, it's a stock that has fallen to the wayside and now it's reemerged. Next one, though, this is so different than every other name on here, and it's so much quieter typically, is Kroger.
It is quieter, but it has such a massive role in our lives, being the fact that it is the second largest grocery chain in the United States, just second to Walmart, which I don't know if you can necessarily say Walmart is solely groceries, but we do compare the two. Now, we did get a majority of Kroger investors on Thursday approving a shareholder resolution calling for the company to produce a report on racial and gender pay equity for its hundreds of thousands of employees. Now, Kroger, which is, again, the second largest grocery chain behind Walmart, did say it raised the average hourly rate of pay for its employees by more than 6% last year to more than $18 per hour. But the union's commission report still found fault in Kroger. And I think a lot of this is tied to its merger with Albertsons, or at least its proposed merger with Albertsons, as it would create an unprecedented sized company with more than 700,000 employees. And actually, the president of this workers union did say the companies need to be clear about how they treat their workers and how the workers are all able to then communicate back with Kroger. So I think more scrutiny, just given the fact that they would be right now acquiring such a massive company that is Albertsons. They would then be the largest grocery chain in the country by a sizable margin. So more eyeballs on Kroger. This isn't really moving the needle today. We are seeing shares up about 0.7%. And like you said, not a name that moves that significantly. It is up 5% for the year, but it's also, only up like 3% for the month, up about 1% for the week. A quieter name, relatively speaking.
Yeah, lower volatility name, consumer staple name, and that's why it's interesting to investors, but it's not necessarily interesting to trade. It's not necessarily interesting to talk about. It's more perceived as steady and reliable and kind of, I don't want to say predictable, but more predictable than something more volatile, more high growth, not profitable yet. 1% is the IV percentile on an already low volatility name. To me, that says everything you got to know about where this one is
moving back up here.
Interest standpoint, from a trading standpoint solely. So for that reason, I'll say downvote. But quite frankly, any of these names on any day can be upvoted or downvoted. It just comes down to what you're looking for in a trade, what you're looking for in charts, and what you want to talk about. So we got Uber and we got Wayfair. This is like a blast from the past. I feel like we're back in the middle of the pandemic.
And the thing that both these names have in common actually is they're both up 75% year to date. So that's a good theme, I guess. Both significant outperformers given the fact that both names have been hit pretty hard. But we'll be diving more into the technicals on both of these names, looking at some example trades as well. Stick around. Next
What news can we expect for now? He was even talking about barbecue earlier. It wasn't the best light, but did speak the words. Merger with Microsoft. Did those people not thank you? Those ungrateful invalids. Troll your boat. Think Papa Ace. You too, Robin Lee. You're regular. We know you. Bitcoin's still going, 32%. Ethereum's up, or no, this is Ethereum Classic. Ethereum's up 10%. Big Lots up 7. Robin Lee's kind of a regular. See, Kitty Daddy would have thanked. Not disrespectful. Beyond Meat, 5.5. This thing keeps waking up. NRC 1.4. Here even flipping green. Mine too. You're down 12.5. By 3 memberships. See? You're even getting delayed at thanks. You guys are making Troyer Boat and Robin Lee look awful.
Let's kick it off here with Uber stock quietly almost
You better.
back, I think, in the vicinity now of its initial price when it became public. It was I think it was like 42.5 maybe, but somewhere around that level in the 40s. It's really not been the company in terms of living up to the hype that it had. I mean, this was like the most sought after, most hyped name going public really in the last 5-10 years for sure.
To completely agree, and I think the timing of its IPO
Airbnb was
it was
much
like
greater, but
waited a little bit long.
it was hype.
IPO, so once it was finally on a public markets, it was somewhat of a like we missed the mark here. But this name is still up over 75% this year, up almost 120% off its 52-week low. So here to tell us now more on the technicals, I'd like to welcome.
Things had a night. It's sustained up here well.
So Rick, walk us through what you're seeing in Uber here, because one thing is for certain, and this name is performing definitely better than its peer lift.
Yeah, this chart has went from good to great.
It's gone, now it has went.
We can see that the chart was trending upward in a
Nerd.
channel for much of this year, and then recently we started to trend up much more steeply, just around the last earnings event here. You can see that
New high of the day there.
lines were our
Still filling the gap.
Uptrend there.
435 looks like
our
a
purple line is our
resistance.
steeper trend that we've been following for quite a while now.
I make a head and shoulders
we
up
can
here
see
also.
as well that the part of the important part of this breakout was when we reached above the 3750 level. That's that green dashed line on the chart. That's our old highs from February when we had earnings during that.
The ego on you.
So we can see
Oh,
now
snap.
we're in an
IP
upside
looking for
breakout
redemption.
situation here. We're breaking above
4 months
that
of your
channel.
support.
We're
Thank you,
also
Ace.
breaking above our +1 standard deviation
Thank you for your
channel, which is a
support.
spot where we might
Yeah, I mean, a little
some
little
resistance.
bounce
That's coming in just above the 42 level.
for the sell-off.
So we can see as well our moving averages.
I don't know what this
are still
line's from.
trending upward. We have our yellow 21-day exponential moving
Not
average
seeing a
there that's
reversal
still,
yet on it though.
Following along with price, but lagging a little bit as moving averages are rather designed to do. They lag behind price because
Just
they
slowing down the
data here.
downtrend.
So we can see also the RSI,
Good.
our measure of momentum there. We were
Might
seeing
consolidate
some
somewhere around
bearish
here.
divergence for a little bit there after the RSI made its initial move into the overbought area in May. It had been trending downward as price rose. However, we broke above that trend line there. You can see that red dashed line on the RSI, and that's important to remember. RSI follows trend lines and support and resistance similar to how price works. So when you have a break beyond a trend line, like this in the RSI, it could be a signal that the trend is starting to change, and perhaps you might want to rethink a bearish position that you have on a security or something like that. But in this case, we did get a nice upside breakout after we broke through that RSI downward sloping trend line there. So in terms of support and resistance, support at our +1 standard deviation channel near about the $42 level, which also coincides roughly with our purple trend line there. And just below that, we've got our channel trend line.
New high of the day on SPY.
21-day EMA coming together just below the $41 level. So that's some support to watch. To the upside, our +2 standard deviation channel comes in around 47. So that's our orange line up at the top of the screen there. That could be a spot to watch for a potential consolidation or slowdown in trend if we are able to reach above our yearly highs that we just made recently.
Yeah, I was watching shares now, Rick, and we are just like 30 cents off of our year-to-date highs here. So seeing a nice day up, still about 1.75% here in real time. But now in trading this name, Alex, considering the fact that, like Rick pointed out, we've been in a pretty consistent uptrend. We're sort of right around our year-to-date highs. Walk us through then a more neutral to bullish leaning example strategy here, considering the fact that we're just sort of peaking right now at current levels.
Yeah, the Barclays analyst Trevor Young was very optimistic on this name, ratcheting up the price target, overweight rating, talked about long-term upside of $70. But as both you and Rick noted, the stock has done very well so far year to date. Of course, we know it's been relatively lackluster on a longer-term basis. So with this one, I wanted to kind of coincide with all of that together and settled on something that was neutral to bullish here. Looking at selling downside below the market. A put vertical below the market here going out to July, 43.41, 67 cents on the $2 wide put vertical. This is roughly 1/3 the width of the strikes. $133 in risk, $67 in max profit. Break even would be 42.33. You find that by taking that 67 cents away from 43, the short call or short put strike rather. Neutral to bullish, we know the risk profile, it's relatively straightforward. One of the more common strategies that we explore here on Next Gen Investing, as well as our other programming here on the network. Elongated Z risk profile, stay above 43. Anticipation would be then that these options would expire worthless. If that's the case, that's max profit. Of course, if they're entirely in the money, assignment and exercise are in play, that is your max loss scenario. With the strikes, net of the credit, that is your max loss. And then in between the strikes, things get a little bit more interesting. Ideally, though, an investor or trader using this type of a strategy would look for this to be out of the money. That would be the goal, and looking to capture that max profit if held to expiration.
Building up on Zim. I like Zim. I think it's probably going to come down, though. Shipping costs have come down so much. I mean, it's already come down, I guess, but in a recession, the stock like this would not do good. You're going to continue to see less shipments. But I do like this one. That was a fun one, man. That was crazy. Down from $70 a share. Like,
up 75% on the year, Rick. So tell us what you're thinking here.
Yeah, this is another one that's had a nice move here. We're
even hitting my alert actually, like right now, today.
Of that small gap that we saw
my alert to buy it
in late May there, and it's been a very pronounced upward move from that point. We can see as well that in the bigger picture, however, the price action has
139% still
mostly contained within these two white dash trend lines that are converging toward each other.
They give me as a divvy.
One starting at the highs of the
$6.
year, one starting at the lows of the year. So really, it's more of a
that's 50%, right?
Overall pattern in this name here, despite the large swings that we've had
all over the place
and the downside here. It was important that we broke above
your dividend really fluctuates a lot
as well. That's that green dashed line.
Sketchy.
The move up took us past our two shorter term moving averages, our yellow 21-day,
hey Jay from the Bay,
63-day. But really, that was a spot that many traders likely had their eye on because it was the low point that we reached after the gap up in January. And that
got a
was
cup,
a consolidation
you got a handle.
On our trip up. that also matches up with
Can
the
it do it in
upper
OTC?
value area. So there's a few
Are we
reasons
seeing
that
stuff?
that level was significant when we crossed above it.
Yeah,
and
not
we
consistent
tested it as
divvy.
well and then
It's
resumed
not
our
good.
upward climb. Now we're at another interesting point on this chart. We're at the 58 level, which is the start of our gap from February. We can also see that this roughly coincides very closely, actually, with our 252-day exponential moving average in purple there. So it's kind of a doubly important point.
Double.
Right now, we are very slightly above it, so that's a good
Indubitably.
sign for the bulls. If we can make a strong close above that point, it would be significant. And it looks like momentum is favoring the bulls right now. According to our RSI study there at the bottom, that's our measure of momentum. We can see that momentum is in the overbought territory, which is above the 70 level. So that's typically regarded as a sign of strength. It's something that it suggests that if we get a nice close above that level, when we make new relative highs on the RSI as well, could be the recipe for further upside in this name. Now, as I said, the 50...
Action fees. Short options can be assigned at any time, and carrying option positions into expiration can add additional risk like unanticipated exercise or assignment. Now, coming up next, it's time for Fomo. So we are looking at all things Celsius, as it did touch new 52-week highs earlier in the session. We'll dive into that stock more coming up next.
Celsius. This channel loves Celsius. People haven't... People are still looking for $17 dividends? On a subreddit with dividends is the name? How is that even possible? Cat falls asleep to the Yaz. I love it. Or is it my smooth Yaz voice? Jenny's soothing soothness. Yep, Jenny's got the glasses. She's even talking about barbecue today. Up 13%. All good things. Gift spy. I don't think it's gonna fill that gap today. I mean, I guess it could. Did have an RSI divergence here on the hourly the other day. Bears take it over at night, bulls take it over during the day. I see, Cameron. I don't cruise Reddit really at all. Makes sense, I guess. Hey, Ronald. No pop every day? Like he gets paid a dividend every day? I don't even know if there's enough dividend stocks you want to pay every day. YouTube guides about that? Yeah, they'll pay either quarterly or monthly. I think is typical. Quarterly is typical, some pay monthly. And you can tell the day they pay on, but are there enough to actually get paid every day? That seems ridiculous. Liechtenstein.
3,000 staff members, including salaried and contract employees from North America and India. In February, Ford announced over the next 3 years that they plan to cut 3,800 jobs in Europe. I mean, this is, well, in line with a trend that we've been seeing in terms of layoffs, cost-cutting measures, but definitely attracting some attention, making headlines today. You can see shares are lower, down by about 1%, hanging out around the $14 level. You know, again, nothing really too major on this one in terms of a breakout one way or the other. I mean, we're still holding inside the range that we established this week. So, but yeah, taking notice of, and I think this is just kind of one more name in line with the trend that we've been seeing in terms of job cuts.
Ben, it's hilarious that it's trading at $14 almost even, because earlier this week we were discussing Ford on a day it was higher and it was also at $14, and Alex was like, it's always at $14. So it feels right. Even on a day when we're down 1%, we are still at $14 in Ford. We will leave it there. Appreciate all the insight, Ben Liechtenstein, the host of Futures. And I'd like to bring back in Alex, and it's time for Fomo. So we are talking all things Celsius, which has become now a frequently discussed name on this show because it's had a really impressive run, really impressive last couple of 12 months, and today touching new 52-week highs.
So call me old-fashioned. I'm a just traditional coffee drinker. Maybe it's the last name, I'm not sure, but I know you're an energy drink consumer. But what is it about these stocks? I know that there's like some stat, like Monster's like the strongest performing stock like ever percentage-wise, and then now Celsius every day is making a new all-time high. Like, what is it about this industry and these stocks, Jenny, that just makes them like the definition of FOMO?
That is such a good point, because Monster over the last 2 decades is the best performing stock.
Percentage-wise.
Percentage-wise, correct. It's percentage-wise is up like some astronomical percent, but Celsius is also up now. I mean, pretty significantly, up 87% off its 52-week.
Generac going again a little bit. 2.25 green.
Drinkers are very intense people like myself. Maybe that has something to do with it. They really hold on to their conviction with some of these names. But Stevens analyst today starting coverage on Celsius with an overweight rating and a $180 price target, which would imply a nice degree of upside from where we're currently trading at around $152 a share. They do view Celsius as well positioned to capitalize on several consumer trends, including increased consumption of these better-for-you beverages and transition towards cold
Those
beverages
all-time highs for it.
preferred breakfast drinks. Now, Celsius is, they said, unique product offering that combines real energy with clean label ingredients. Not only differentiates it from traditional energy drink brands, but allows it to reach beyond some of these traditional energy drink consumers and then bring in this new incremental buyer, which I think is a really good point, because there is definitely some kind of public perception that if you're drinking an energy drink, it's not healthy. So this is definitely seen as a more clean energy drink. I will say, to this analyst's point, if you read the ingredients, they're not exactly that healthy either. If you're ever consuming anything, Alex, that it's like under 10 calories, you have to know that there's some chemical makeup that is making that drink have basically no calories. But nonetheless, I can really respect the fact that this name has seen such a strong year. Of the 11 analysts covering it, all 11 have strong buy or buy ratings. No sells, no neutral ratings, nothing bearish. It's kind of amazing.
Pre-workout?
Extremely,
Do you not work out then? You just pre-workout?
Very, very well at managing its perception, targeting an industry that maybe had
Patrick Burns?
Weaknesses in the department of maybe health as a perception of sort of the healthiness of their products. But also, I think Celsius has sort of done a different thing very, very well, which is utilize sort of new channels of marketing very successfully. We've talked about, brands in like the footwear apparel space, like On or Hoka being a little bit more successful and using things like TikTok and Instagram. And I feel like Celsius has done that through podcast partners and YouTube partners, etc., that are sort of targeting
Coast Guard,
which may be a more likely consumer to adopt this product than someone who's maybe drank coffee for 40 years, for example. So I think it's interesting, but I do also think an important piece here is the analysts are now taking note of this. More and more analysts, while they're all optimists at this point, are covering this name. This wasn't a name that was getting the kind of attention that it does now a year and a half ago.
Absolutely, and I think that, like you said, it's coupled with the fact that the street has paid attention, but also the fact that this name has the influencers on its side. I mean, this name is everywhere across TikTok, Instagram. It's one of these names that's so heavily endorsed by some of these social media influencers, which I hate to even give credibility to, Alex, but it's honestly then helped to bring notoriety to this name and bring really this brand to market. I mean, now they say they're the second largest energy drink sold on Amazon, just behind, of course, Monster Energy, which I will say, I know that the people love Celsius because there's all these flavors, but I'm still tried and true on Team Monster. But I can drink a Celsius every now and then.
Yeah, like I said, I'm going to stick to the traditional coffee, but from a stock trading and an investing standpoint, it's been hard to ignore this name. Celsius Holdings, of course, the parent company of the products that we're talking about, has just been a really, really strong performer, and seemingly it's done so on the back of impressive quarterly reports at times. If you go back to the most recent one, there's a huge gap on the chart. The stock has done well when it's had to kind of face the music, if you will, and present results and talk about its growth, and it's been quite successful at doing that. So you can see why there's optimism from different analysts that potentially this one as well. From a trading standpoint, though, Jenny, with the optimism kind of brewing in this one, I did want to look at something that would benefit from an upside move, but you can't entirely ignore the fact that it's been kind of a one-way street for quite a while in this name, and possibly for good reason. But I looked at a more neutral to bullish strategy, somewhat omnidirectional in the event that the stock does pull back even slightly here. But skewed put butterfly, going out to July, buying one of the 150s, selling two 145s, then buying one 135 put. 50-cent credit. If all these options are out of the money, they all expire worthless, well, the investor would just keep the credit received net of the transaction fees involved in the trade. So not accounting for those fees, it'd be $50. Neutral to bullish, break even, though most importantly, down at $139.50. And that's quite a bit below the current share price, particularly for a name that has seemingly outperformed over the last few years quite well, giving yourself a little bit of cushion in the event that there is a bit of a pullback. If it does pull back and then stop around 145, that's where things can get really, really interesting here, is you can have both sides of this trade, which is called a butterfly, but really it's just a debit spread and a credit spread kind of smashed together at one strike. That's where you can see that peak on that graph there, up there at 145. That's where the $5 debit spread works towards max value, and the $10 credit spread works towards being worthless, which for the investor is the best case scenario. Break even, as we said, and the total risk on this trade is 450 bucks. That takes place below 135. So you're going to need a pretty big move. It's not out of the question, of course, for a name that's moved around as much as this one, but nonetheless, relatively high probability trade compared to, let's say, just buying stock, but it is profit defined as well as risk defined.
And of course, making a nice move higher, still up 3% on the session, even in spite of the overall market weakness. So a clear outperformer today. But now coming up next, we will continue on our influencer conversation unintentionally. We will be looking at all things TikTok, expanding its retail offerings and how that could impact names like Snap or Meta, which are shaking off this news today. Meta shares up over 1%, Snap up 4%. We'll discuss that more coming up next.
SPY still rallying there. New high in the day. That's kind of that resistance right there. What does this tweet mean? I don't... Who's Patrick Byrne? It says you have a victory to look forward to next week. It's not a total victory, but in this war you might think of it as an Iwo Jima victory. So if you're thinking of doing something stupid, just hold on 72 hours. Be glad you did. Probably getting a little rejection off of that high. What's he even involved in? I almost took a short there, but I'll wait. I'll wait for some better indicators other than just a resistance. Life Fitness. Yeah, if I was working out, I wouldn't just do energy drinks. Workout makes a lot more sense. Florida? Florida? Or else can you have happy money on the East Coast? Yeah, I don't think you're getting a divvy from GME soon. Maybe next year. But typically a growth company like that's not going to give out a dividend. Right? They put all their profits back into the company to keep growing. Maybe like a one-time divvy? I don't know. That's awesome, Cameron. I didn't know they were actually... I remember seeing pictures of that on Superstock like a year ago of this one GameStop that had a couple computers set up. Cool to hear they're doing it more. How does it work? You just pay for the time like a normal gaming cafe? Oh, Patrick Burns, a former Overstock CEO? What? Interesting. Hours, huh? How about Monday? Might be useless, but that is interesting.
Bums me out, but what I can get behind is watching two billionaires potentially fight each other, because that to me
He is saying a short squeeze.
So I understand why
He is directly saying a short squeeze on GME and Bed Bath & Beyond.
Markets correspondent for the network. Now coming up next, it's time for Under 30. We are looking at Applied Digital, that's ticker symbol APLD, up over 8% after expanding its AI offerings. We'll discuss that more with George Tillis coming up next.
almost spit out my food. You guys make me laugh.
The network. So George, walk us through this price move today, because this is not the first big upswing we've seen in shares, with them now up about 1,200% off their 52-week low.
Yeah, it's not the first time we've seen this sort of
Big lots up
We
8
actually
point.
had another one back in late 2021, so it seems to be following some of the trends in Bitcoin. I think that's important.
Thinking
to note here,
barbecue
and that's,
dumps, maybe.
actually one of the catalysts associated with the movement we've seen out of recently for this name Applied Digital, which
I don't know,
very
just
much about the company
it's
beforehand,
butting up
but
against this resistance
there is
again
some,
today. Not to say the trend's not gonna be up, but
one of the things about it is it's basically
yeah,
a
I'm not
next
sure.
generation
Just being
high-performance
Friday also.
computing data center platform. They basically provide hosting services for Bitcoin miners, companies like Riot and Marathon Digital, symbol MARA, which we know in the past few months or so, alongside Bitcoin, those stocks have been moving higher as well. But this
Spy
company
sitting up a
also
little, head and
provides
shoulders up here.
hyperscale language processing. We know artificial intelligence and graphics rendering has become a big theme as of late. That's another catalyst, I think, that's behind the stock movement. And there's also another meaningful catalyst when it comes down to growth, real growth in terms of sales, not just in equity, but the company did secure, based upon their announcement, $460 million contract from a particular customer, which
It's still
again,
on this
it's
buying
also
channel.
licensed Marathon Digital, and that's over 3 years in terms of a sales contract. Alongside, if you look back about a month or so ago, they secured another $180 million contract for 2 years. So this is a company that's growing exponentially in terms of price. It was literally a penny stock.
Sell some shares in it, man.
2019.
I didn't get enough shares to sell any here.
Exponentially, its sales growth, considering
Good.
the sales for last year and the last
Could
4
sell some out
quarters,
here.
there was about 41 million. The guidance for 2023 now
Got
is about
such a
56
few amount.
million.
I'm
The
like,
kicker is,
hardly
if
anything.
you look at the guidance for sales now, going into 2024, 302 million. So you just compare that to 50 million for this year, and then also for 2025, they're guiding for 429 million. So we're seeing essentially an exponential move in sales growth, and I think that corresponds to what we're seeing in terms of the price.
George, it was used to be called Applied Blockchain. I think the shift maybe to digital in the name is maybe symbolic of sort of what we saw kind of happen in the digital asset space, and maybe this opens up the potential customer base a little bit more and can capitalize on some of the AI technology hype that we're seeing. But who are they competing with? I mean, this isn't a company competing with like NVIDIA, which we know has data center roles, but they're making more of the infrastructure. It sounds like Applied Digital is more of the software.
It is, and that's the thing. So they're competing with companies like Digital Turbine. They're competing with Matterport. These are a couple of names I think we've even talked about on this program. They're smaller scale competitors in the software space. So if you consider their business, it's not necessarily hardware. It is, again, a software-based, hyperscaled, cloud-based platform. So it's basically data center software. That's essentially how you could describe their technology. But it's a very small company now. Not necessarily as much as it has been in the past, considering the 100% increase in price. Its market cap right now is around 870 million, and one would say, hey, that doesn't necessarily mean much, considering the price action we've seen. But if you consider just the numbers are reported for 2025's sales of around 429 million, it's only trading around 2 times 2024 sales. So it's not exorbitant in terms of sales, but one of the things you have to keep in mind with these moves is what's going on with cash burn. And so if you look at how much the company has in cash, about 22 million, but they're burning about 42 million in cash. So it looks like to me, again, there's a reason why the stock is moving higher, because of the sales contracts they have. But at the same time, there's probably an incentive for them to issue a secondary offering, just because they don't have enough cash on their balance sheet to secure their expenses for the next year. So short interest, about 11% of the free float. I'd pay attention to that. If you start to see that increase, that might be meaningful in terms of additional short sellers adding to their positions in expectation of a secondary offering, which in terms they may end up covering after that point. So this will be interesting. I can't say what will happen from here, but there's no doubt their sales are improving significantly, and I think that again corresponds to the price.
Yeah, and George, really quick before we let you go, I was thinking this is only their second AI customer, so I guess you could look at this name and sort of what you're saying. There is so much more potential even still with its valuation relatively low,
Yes.
and the fact this is only its second AI customer is sort of blowing my mind.
That's true. And so you have to think about the number of customers. I think it's important here as well because some would say, maybe even analysts who may provide some expectations on the company because there's more visibility now. It depends on how many customers.
Okay,
they have,
Cameron,
if those
I sold
customers
some.
are concentrated. So that's another
Welcome
thing
to
you have
Moon now.
consider, which is a risk. But at the same time, the sales growth, like I said, has been tremendous, and the expectations for sales are still quite a bit higher than last year. And again, I can see why the stock is higher, but it's been very volatile, and because it's a small.
Still could be making a handle on this cup.
You just have to expect volatility if you participate.
Yeah, and I think a really good look at a name that is obviously a smaller
You're welcome,
player in
Trace.
this overall AI boom, as we frequently talk about, like NVIDIA, AMD, but this name is also getting a nice lift. It's just all relative, I guess. So we'll leave it there. Appreciate the insight. As always, George Tella, Senior Markets Correspondent for the network. And that also does it for Alex and myself for Next Gen Investing for the entire week. Now coming up next, we have the Watch List with Nicole Petalides.
Dish down 3.3. Like big. 8.8 is the way. Yeah, head and shoulders there on the 5-minute. See if we build a bigger one now with this shoulder. We're on VWAP. Really need like big movement back down here below VWAP to have this whole trend reverse. Otherwise, we're still looking pretty bullish for the day. Barbecue moving down a little bit. Still in this barbacoa range. Set the support now. VWAP just a little bit lower. Binance has been ordered to stop crypto services in Belgium. by their markets regulator. Germany aims to purchase 60 Chinook helicopters from Boeing for up to 8 billion euros, including necessary infrastructure works in Germany. Why does Germany need so many Chinooks? Yeah, I didn't care about that. Barbecue, a little lower now, out of that barcode range. The first leveraged Bitcoin futures ETF was approved and will launch Tuesday. Oh boy. I'm moving down to VWAP here. If we form a shoulder here, I'll probably get some puts again. Right now I just have the short futures. I don't have enough time though, it's already 2. Testing VWAP. Barbecue, getting close to VWAP. 2176. Still up 11.25. All your money instantly. Yeah, barbecue, nice moves. Volume I think is pretty low today still.
Thank you for all of that. Kevin Hanks, great to see you as always. Appreciate it.
Hanks is stoked it's the weekend.
Let's take a look at the bigger picture. Ryan Nauman's with us, market strategist at Zephyr. Thank you for being here. So what indicators are you watching? I mean, we saw some slowing in China, even though they've been trying to provide some stimulus. We saw a lot of cuts on GDP from many of the analysts. There's some concern, right? Investors are using more credit cards. Folks are using more credit cards. Where do you think we are right now?
Hey, Nicole, thank you so much for having me on first. Like Kevin said, I think we're going to see a little bit of lull moving into the summer, and a lot of it's going to hinge on the Fed. And there's 3 primary indicators I'm looking for that are going to determine the Fed's direction moving forward: consumer spending, like you mentioned, the labor market, and financial markets. The Fed, if they're going to surprise and raise maybe 2 or 3 more times this year, the labor market will continue to be strong. despite the noted layoffs in the tech sector. We're getting a real income has turned positive, and it looks to grow even further as inflation comes down a little bit. And you talked about the consumer. The consumer remains strong and continues to spend. Their drawdown in excess savings, although and increasing their credit, but resilient asset prices, the strong labor market have supported consumer spending. And then you have the strong equity rally.
Continuing to drop through VWAP there.
And you have a stabilizing
get into the neckline here.
Market. If those indicators continue to remain strong,
if you get a bounce back up to the shoulder,
remainder of this year, we could see
4 more downs.
Surprising and tightening more than 2, maybe even 3 times.
I mean, they have said that. They have said they are still ready to tighten. They think that the current situation, inflation, is just not coming down fast enough, and more hikes are likely based on when you look at the Federal Open Market Committee and the votes that are going on. As far as cuts, those seem way out, right? Even if we have a recession.
Yeah, you're exactly. And the Fed, Powell said it, that cuts are years out. Investors aren't agreeing with him. They don't believe Powell in the Fed, and I'm not sure I do either. And we can look at the banking sector. We think the banking sector is healthy again, and maybe it's all rosy again, but I don't think so, because I think there might be some weakness in the banking sector ahead due to the deepening inverted yield curve. We're seeing potentially more withdrawals of deposits because investors are moving to higher yielding short-term treasuries. Now there's an alternative. And additional tightening is going to force the Fed's hand to cut rates sooner than they want, because I think that additional tightening and those other factors I just mentioned are going to cause some weakness in the banking sector, and that's going to force the Fed to consider cutting sooner than what they want, potentially in 2024.
Yeah, it seems so far out. In the meantime, we're in a rising rate environment. Often that can squash tech. It hasn't necessarily done that. We've seen the NASDAQ soaring this year, being the best of the bunch. And there are a lot of folks who think that the Magnificent Seven and these semis and AI and all these things that have led the way will continue to do so. What is your outlook on tech?
That's a great question. It's just a reversal from 2023, right? Tech underperformed in 2023, and now they're driven by the Magnificent Seven, and AI has, as we know, have driven markets. 80% of the market performance here today is driven by tech, specifically those Magnificent Seven names. And a lot of it's driven by AI. AI is here to stay. So I think while tech, there is more room to run, I think the performance, the rise is going to slow. I think the solid returns are going to come back a little bit. I think it's a little bit overdone. It's not like the .com era, but I think it is a little overdone. Lofty prices, and I do believe you're going to see a narrowing of a gap between the winners of the tech names and the laggards of industrials and materials moving forward this year, as investors start to take some profits off the technology winners, as there's some uncertainty around the Fed.
So it's a good opportunity to take some profit from tech and move to value sectors. Tell me what your thoughts are there. What would you say may be a good way to set up a portfolio right now?
Yeah, that's a great question. And I think that's what we're seeing right now today, or this week. You talked about, our winning weekly win streak is coming to an end this week. And I think
got a little inverse cup here.
Investors are taking profits off the table. They're
for a handle.
Profits. We've had a fantastic run. Now is a good time to take some of those profits as we go into summer, the dog days of summer. Focus on some of these laggards or these sectors that are more attractively valued, like consumer staples and industrials.
Unless we just flush through.
A lot of potential there and a lot of opportunity in some of these sectors that have been overlooked during this great tech run of this.
No handle.
And it's
We're flushing.
time to
Shoulder was quick.
Take some profits. Get your portfolio back in line now with your investment objectives moving forward.
Right, understood. At this point now, are you worried at all, or just, this is par for the course, and, in 1 or 2 or 3 or 5 years, we're higher?
I think over the long term, yes, we're higher. In the near term, for the remainder of this year, I think this bull market is fragile due to the high percentage
big
of
wick.
strong returns that is contributed by those mega tech stocks.
Right back up to the cup.
Concentration is at the highest we've seen ever. When you consider the 10 tech names in the S&P make up nearly 30% of the index, and it's accounting for 80% of the equity gains this year. That's concerning. That's my biggest risk moving forward, is a high concentration of these major indexes. And if there is a Fed surprise,
volume up
maybe an earnings miss, because these
on this
big
news.
tech names, they're priced to perfection. If there's an earnings miss and those detract and we see a sell-off, it's going to impact the entire market because of a high concentration. And that's my biggest risk moving forward. And that makes me feel a little bit more cautious moving forward, that this bull market is fragile due to the high concentration in those magnificent 7 names.
Yeah, it's great to see you. Thank you so much, Ryan Nauman of Zephyr. Great conversation.
Yeah, it's not diversified at all.
Appreciate it. All right, later this hour, we have a great setup for you. Of course, we're watching the layoffs and streaming and what's behind the cuts there at Warner Brothers Discovery, and the drama at Turner Classic Movies, one of my favorite channels. And how about Boeing? Morningstar's Nicholas Owens will join us and weigh in on the industry demand there. And our panel ready to talk all about NVIDIA and what to expect for the AI boom that is
NVIDIA.
What's next? Up next, though, David Dietz is standing by. He's got a close look at Bank of America and a couple of other names to keep on your radar. Stay with us. We'll be right back. The Watch List. We'll be right back.
We'll bounce around barbecue off of VWAP.
200-day moving average for the first time since May of 2022. SoFi Technologies also trading lower after Compass Point initiated coverage with a sell rating and a $5 price target. As analysts note, mentioned capital becoming a possible constraint for future growth. SoFi shares have risen more than 20% since the debt ceiling deal that included an end to the moratorium on student loan payments. And Virgin Galactic shares are falling after the company's announced another dilutive stock offering. It's expected to raise about $400 million for developing its spaceship fleet and for commercial infrastructure. Virgin Galactic is set for its first commercial space flight as soon as next Tuesday. Get ready. All right, and then we check in on Bitcoin, which has been soaring. It is up 3.1%. 31,325. Of course, we had BlackRock.
Bitcoin's up 37%.
Wisdom Tree, Invesco refiling for their ETF. So a lot coming your way pertaining to that. So for more names and market trends to watch, let's welcome in David Dietz, Managing Principal, Senior Portfolio Strategist, PPAC Private Wealth Management. We were having a lot of fun. I mean, that's how we got to the cage fight. But we were talking about a lot of the themes that were and now are not, right? The metaverse gone. Nobody talked. I was saying AI. People have been talking about AI and crypto, but people were saying crypto went the way of the metaverse. I mean, what themes are you seeing here as far as some of these big, things we used to watch?
Yeah, absolutely. So here's the risk that so many people have bought into the hope and hype of artificial intelligence. And of course, we've seen that triple Qs go up 38% year to date. Stocks like NVIDIA, the poster child for artificial intelligence, has tripled. But the problem is it's 41 times not earnings, sales, Nicole, 222 times earnings. And what we've seen over history, whether you go back to the dot-coms in the 1999s or the pot stocks or the alternative alternative universe, virtual universe, meta, and so forth, that although they all have long-term productivity effects, in the short term, investors get burned. You don't want to chase the hope and the hype. It's going to take a decade or more to play out. And so that's what investors need to be cautious of.
Yeah, I mean, all those things that we were talking about. You mentioned crypto, the metaverse, EVs, that was the hottest thing going. Really, Tesla still seems to be the one that's leading the way. Cannabis, remember everybody? I know one guy who quit his job just to invest in cannabis, and he's been waiting 5 years to make a buck. It's tough. That being said, I know you have a good name, like Bank of America. That one is right now.
Why do you have to quit your job to invest in cannabis?
We've had a run-up, but some slowing seems to be.
Maybe she meant to say smoke.
So I think investors need to be a little
Whose
cautious
job is
here.
smoke?
We've seen almost a full year's gains in just the first 6 months. With the S&P 500 at 13%, it could be flat for the rest of the year, and people would chalk it up to a decent year. Almost all the gains have been not due to great earnings strength, but rather expansion of valuations and so forth. But some of the bugaboos for the market are still there. We still have a hawkish Fed. Is it one hike or is it two hikes, and what's that going to do to us? We do have a slowing economy. We've just got more information on the manufacturing index. Hit a 5-month low this morning. Services are still above, still in expansionary mode, but short of what analysts had forecast and so forth. So you've got to watch that. And finally, of course, there's some other signs. Retail investors are plowing into this market, and unfortunately, usually they're late to the party. They're paying too much. Well, we're seeing insiders back away. Advanced Micro Device insiders. NVIDIA, one of the co-founders of NVIDIA, just sold $51 million of stock. Now, people say, well, they have to sell stock to put their kids into summer camp and their travel plans, but $51 million, come on, Nicole.
All right. Well, what about abroad? You said the strategists generally believe that there's some better opportunities overseas. What are you watching?
So definitely,
They're really doing a cannabis dispensary.
Activities overseas are more attractive insofar as the valuations are lower, the dividends are better. Indeed, Japan come back to like a 33-year high and so forth. The second largest economy is in the doldrums, but you can be very sure that Premier Xi is not going to let America get away from it in terms of stock valuation and so forth. They need the participation of overseas investors, and so you're going to try and rectify that.
So as I look at the names that you picked today for folks' portfolio, you don't have any of the Magnificent Seven on there. The names that have been running up, right? The names that are up 50, 100%. None of those. Do you not like them, or you just feel like they're too frothy?
We're very value sensitive. I had the good fortune of sitting with you back in November. We talked about Meta platforms.
Yes.
You know, that's more than doubled since then.
Right. Thank you for that.
Earlier in the year, we talked about Amazon. No one wanted Amazon. It didn't have an AI strategy. They were losing money on their retail.
Yeah.
That's come up 35%. And so forth. But at this point, we need to kind of rotate a little bit. First of all, I would tell investors, look at the bonds in your portfolio. So here's the issue for the markets. We've got bond rates very high, but inflation is coming down. That means the difference between what you're getting on your bonds and the real return when you subtract inflation, it's getting bigger day by day. That's the risk for the market, because that increases the risk of recession as interest rates effectively get higher. But if you have some bonds in your portfolio, that could offset some volatility in the second half.
All right, so let's get to Bank of America.
Hey,
you like it?
You know, all the financial institutions have been dragged down because we've got 3 banks that went under back in March. There's a flight from deposits. There's concerns over the valuations in banks' portfolios. But you look at a company like Bank of America, that's in the too big to fail category. And it's a coast to coast, has one of the most biggest troves of FDIC insured deposits. In fact, over 600 million of their deposits still don't earn any interest. People are happy there and so forth. Meanwhile, you've got a stock that's come down about 25% since February. I love Brian Moynihan. You got 3.3% dividend. If interest rates come down, less pressure on deposits, the bank portfolios will go up, banks will do well.
Look, it's also my understanding the big banks don't really have the same exposure to commercial real estate as some of the smaller banks, regional banks, right? So that some people were concerned about what kind of exposure they have, how much they stand to lose. That being said, let's get to your next one here, Realty Income.
So in this market, we love a little income for stability to ward off the volatility that we're seeing. So you got Realty Income, it's a 5.3% yielder. So that's about 1.5% over the 10-year Treasury. But the problem with the 10-year Treasury is a fixed income. Realty Income is a dividend aristocrat. What does that mean, Nicole? It's increased that dividend for more than 25 years in a row. So what are you invested in? They're invested in primarily retail tenants, over 12,000 properties countrywide and also over in Europe. What I like about their leases, they're triple net lease. Well, what's that mean? It means that the convenience store that leases the property, they're in charge of the taxes, they're in charge of the maintenance and so forth. So they're just collecting these streams of income. So it's very, very secure, conservatively leveraged.
Talking about my stock there. That's one of my BB stocks.
Down about 25% in the last 12 months.
Right, another one that's been beaten down a little bit with some opportunity. The upside, last but not least, Exxon.
You'll get some O.
I mean, Exxon
Get some more O.
Is the giant in the fossil fuel industry. My main thesis there is policymakers, institutional investors are urging energy companies, stop producing. You're going to kill the climate.
Get it back down here.
Consumers, we're not going to get an EV car until we trade in the current car we have. We can't afford it. We're not going to cut off the natural gas to heat our homes and so forth. So you got supply shrinking, demand going up. That's going to be higher energy prices. Meanwhile, Exxon is about 18% off.
Barbecue's broken. I sold it. It didn't rip.
A nice 3% dividend.
Ready to sell more.
Having increased that dividend more than 25 years in a row. So I think this is a good hedge on all the things that can
Is it broken or is it fixed now?
Dividend aristocrats. I mean, it just really shows the commitment that these companies have and the balance sheets that they're willing to continue to raise those dividends. I mean, that shows financial stability. That being said, just a quick
O's nice. You can start scaling it where it's at. It's not a bad spot. It's a nice support.
I mean, is the consumer okay? Because, you know, there was a time that household wealth.
I think the housing market's going to crash, though, and that'll pull O down.
You know, rates were like near zero and all that. Now, like the credit card rates are 20%.
But if you don't share that sentiment, then
they're digging into their
no risk.
savings. They still face
Low risk.
inflation.
ENRCF 3%.
I don't know. I'm a little worried. Are you worried or not really?
We worry about everything, but I think
the big thing
that people did not expect this year was that the unemployment rate would stay so low.
Yes.
And as long as you have a job, you can handle a little extra interest on your credit card. A. B, everyone's 401k. If they have the S&P 500, they're up 13%. So they're saying, I got a job, and my nest egg is doing well, and that's why you're seeing a lot of spending here, which I think the Federal Reserve didn't count on, and which is giving a little tailwind to this economy. But of course, things can change. You know, there's a feedback loop. If that market goes down, then people cut back spending, and all of a sudden the Fed starts to get worried.
Right, understood. Because they are still traveling and doing the experiences, and they've moved away from goods, but to services and hospitality and entertainment. David, love when you're on the show. Thank you so much. David Dietz, always amazing. PPAC Private Wealth Management. Thank you for being here in person. All right, coming up next, what's behind the cost cutting at Warner Brothers Discovery and some of the other streaming names and trends that we would like to watch next.
Buys coming down. And a bear flagging down here.
Welcome back to the Watch List, friends. I'm Nicole Petalides. It's Friday, TGIF. I want to talk about streaming because what themes are we seeing? Dan Rayburn's with us, streaming media analyst. A lot of layoffs news that we've been hearing. What's going on? Warner Brothers Discovery,
Still going.
Disney,
Almost
Paramount.
10% on that.
What are you watching, and what does it mean to you on some of these
Fish
actions
sold
that
off
are
some
taking
more.
place?
Hey Nicole, happy Friday. Good to see you again. Yeah, you know, it's funny. Every time we get together, there's always so many things we could talk about that are taking place each week in the industry when it comes to streaming. And the latest that people are talking about a little bit is the layoffs of Warner Brothers. But, you know, keep in mind, Warner Brothers Television laid off about a quarter of its workforce last year. HBO Max laid off 14% from the operation programming group. The sports division laid off people earlier this year. So the fact that this week they're laying off about 100 employees from HGTV, Food Network, TCM really is not surprising because, to your point, Disney, Paramount, and others have done the layoffs as well because all of these companies need to get to free cash flow. They need to turn a profit in their business, especially tied to direct-to-consumer and streaming. And the fact that Warner Brothers has come out and said that they think that they're going to be free cash flow positive this year, and they generated $50 million in profit last quarter in the direct-to-consumer business. That's the key takeaway here: profitability.
really what people want to see. I mean, you know, it's great to say this many subscribers added or this kind of lineup for shows. In the end, people are getting back to the basics. It's the year of efficiency, isn't it? And profitability is really important. So as you noted, looking at free cash flow positive this year for Warner Brothers Discovery, possibly. For Paramount, Disney, and Warner Brothers, are they all still great competitors? Would you still say, I mean, I know you don't do stock recommendations, but do you buy the concept of what they're doing? Are they still buys in your mind in that way?
Well, I do in the sense that there's going to be a core set of main players that we call winners in the space. Now, everyone defines winners differently, especially on Wall Street. But if you think about the type of content that all of those streaming services have, plus Netflix, plus Amazon, there's enough room in the market for 6 or 7 major players, especially since many of them have different business models. Some of them are doing live sports, others are not. Many are now adding an advertising video on demand, what we call AVOD option. But yes, as they all, to your point, do more with less, and they cut costs, but they continue to contribute to good programming, that is something consumers are always interested in. The problem is obviously that these streaming services continue to go up in price, and there is a limit in terms of how much consumers will spend and how many services they will buy.
Yeah. Let's get to Turner Classic Movies. Is there a little drama happening there? First of all, I love that channel, but tell me.
It seems to me, if you read the media, they seem to think it's going away or disappearing, but from what Warner Bros. Discovery has said is it's not. They continue to invest in the channel. They're keeping the channel. Yes, they did do some layoffs from there. We do not know if TCM is profitable. They do not break that out. Also, TCM obviously doesn't show ads, so there's nothing from a Nielsen standpoint that's we can look at in terms of measuring viewership. But you know, they make their model largely on 2 things: cable carriage fees, and its fan base, like people who just love TCM and classic movies. And there's obviously a lot of great content there. At the same time, we all know where this is going with streaming. So consumers have a lot of choices in the market, but it sounds like TCM is not going away.
Yeah. You know, I will say in the New York Post every day, and I mean, I think this is just telling about old school folks, like myself, because that's how I like to read a real paper. I read everything online, but I like a real paper, right? I get my Barron's for real. And I still have regular cable. And so on the back of the Post every day, they have the top 3 movies tonight to watch. Majority of the time, one of them is on Turner Classic Movies. So that's free advertising right there in the Post.
Sure.
As you noted, that's how they're getting their money, is through, you know, old school cable. While there's a lot of cord cutting going on, and I don't think that's going to stop anytime soon. There's still a place for it, but I don't know how profitable it is. How about other names? I mean, Netflix, we have to talk about Netflix. And then there's the others that are doing well, YouTube and Hulu and other things that are really still growing, right? And Amazon Prime.
Some are, some aren't. So just, you know, Netflix, it's interesting. We had this discussion I looked up about 13 months ago, just how much Wall Street had soured on Netflix. And to your point, wow, a year later, they're up 131%, which is incredible.
Right.
Their earnings are less than a month away, so that's going to be fascinating to hear just what they may talk about with regards to 2 things, really: password sharing, since they've done a crackdown, and also any additional data they're going to give us around the advertising tier. Those are the 2 things we're looking for. Some of the others in the market, Hulu is still growing, but at a little slower rate. YouTube TV, we don't know what's going on with YouTube TV. They announced this week that they're going to be cutting access to SNY. So for those in New York, that's a problem who like sports.
Yeah.
But the biggest thing we are watching in this industry at the end of this year in September is NFL Sunday Ticket on YouTube TV.
And that's the difference. It's my understanding from every analyst I talk to that sports will make the difference for the streamers.
It absolutely
who's leading?
could.
Who has the potential to lead?
Well, here's the thing. Consumers expect a unique experience for live and especially sports. And YouTube TV had an outage last night in the Northeast, affecting customers on Verizon, right? 30 minutes in length during the NBA Finals. That's their second outage in the last month, twice in the last month. So when it comes to sports, you've got one chance and one chance only to get this right. It is live. And with NFL Sunday Ticket, customers are paying anywhere between $250 to over $400 up front in advance. So this is going to be make or break for the industry as far as whether or not people think streaming as a technology can replace cable TV as a distribution platform. But there's a lot of winners in sports. It all comes down to how they're going to monetize it.
Yeah, I didn't realize there had been an outage last night. I think that's interesting. And Apple TV, we left out Apple TV, but let's leave it there for now, because I agree with you. I think sports is a big part of it. And if you want to watch on Thursday, you need Amazon Prime, right? If you want to watch NFL on Thursday. Dan Rayburn, thank you. Streaming media analyst, giving us all the drama from all the networks. Media analyst for joining us here on the show. All right, still ahead in the second half. Are you watching Boeing? We are. Morningstar's Nicholas Owens weighs in on the industry demand and what to make of the supply chain issues that could be facing this company. As we head to break, let's take a look at winners and losers.
Highs coming down a little more there. Building this inverse cup once more. Not sure if we have enough time. We'll see. A lot gonna happen in the last hour though. Last 10 minutes, last 5 minutes. We could get this whole cup handle, even a flush. Last hour and a half. This shoulder and this shoulder too. $36% on Bitcoin. Crazy. Bye, fleshy. Fleshy, fleshy.
A day, 7 days a week on TD Ameritrade.
the Junes. They're set to end a 5-week winning streak here with this lower close here heading into the end of the week. We're currently trading down on the day by about 0.7%. Taking a look at where we are relative to last month's highs and lows, you can still see this pullback here, Nicole, a small blip on the radar relative to the rally we've seen off the May lows down around 40.50. And then I just wanted to point out how we're above the 50, the 200-day moving average in all 4 of the major indices. This is the ES, again, holding above those closely watched levels. And look where the VIX is right now. We're talking at 3-year lows. So just doesn't seem to be a lot of fear out there. Investors seem to be coming grips with the higher for longer environment that we're hearing and that activity we saw this week from central bankers.
Yeah, there is so much going on. I mean, central bankers that you mentioned, a lot of them raising rates this week, even though the Fed took a skip. Other banks, central banks, did actually raise rates. I just saw gold closed at 3-month lows, basically down for the week. Its worst week since February. You're watching oil closely, which is having a similar story in a sell-off, right?
Absolutely. Some of the selling we saw this week, a reflection of the central bank decisions, surprise hikes, and the expectations that's going to start to weigh on economic growth. So here you can see some selling, again, much like what we were talking about in the terms of the indices off the highs that we saw earlier this week. In this instance, up around 72, almost $73, down to 67.35 here today. Nicole, some of this comes from a stronger dollar, but I think this is more tied to rates and some of the uncertainty there, in addition to Russian oil that's been getting out, driving prices lower, some of the concerns about demand into the second half of the year. Taking a look at crude oil, though, you can see it's still, even though down to $67, we did not take out the lows from earlier this month, which was around $66.80. So holding that key level and relatively range bound. As I look at where crude is relative to the 50-day moving average, you can see we're below it, but again, still contained and somewhat range bound. And just want to bring these two conversations together. In the candles, the yellow lines here, I've got the ES. The purple line here, this is crude oil. Look at the divergence. Normally these two track each other very closely, not necessarily tick for tick, but the divergence you're seeing on the right side of the screen should be watched. It's going to resolve one way or the other. Either the indices have overdone it to the upside, or crude's got a little bit of room to run here higher ultimately. But let's keep an eye again on this divergence between the S&Ps and crude oil here.
All right, thank you for that. Thanks for a great week, Ben. Until next week, Ben Lichtenstein, appreciate it.
Lichtenstein. Eyes coming down more here.
Now, Nicholas Owens is with us, Industrials Equity Analyst at Morningstar Research Services. Thanks for being here. I was just looking at Boeing and reading your note, and a flurry of purchase orders after the Paris Air Show, another supply chain issue, not great news there, an ongoing strike at Spirit Aerosystems, a lot of things that are happening. But in your note, you said it's the middle class. Their demand for air travel is going to keep Boeing alive, or at least in part. Explain some of the things that you're watching, all of those, I'm sure.
Yeah, you did a great job summarizing the kind of basket case scenario that Boeing's going through, but I really believe that's almost all short term. You know, you have COVID supply chain stuff, and then there's specific issues around some manufacturing problems that Boeing's been having. But the big picture, and you know, they recently released an updated global forecast for aircraft, and we have a similar forecast at Morningstar that looks very similar. So you basically have the phenomenon that people fly a little bit more. The growth in aviation is a little faster than GDP growth. And so you look at global GDP growth and you look at where there are markets like India, which is a great example, that have not fully developed a aviation market or aviation network. And so that, you know, in China is among that group as well. So you look at that over the next 20 years, and basically you get to this result that if there's 24,000 planes flying around today, by 2040, we expect there to be almost twice that. So that's where you get these numbers like these companies, Airbus and Boeing, have to produce some 2,000 planes a year, which is more than they've ever done to meet that demand. And then you have a supply chain strike, et cetera, and it seems like Boeing can't do it. But I think they can. And again, we're talking about a 20-year time frame for this story to play out.
And so the supply chain issues, while sometimes they seem really big deal in the near term, you're saying it could be more of like a hiccup or something in a longer term scenario, right?
I do. And at some level, it's almost hard with Boeing. Like there's always another story, and it's kind of amazing.
Flush in
they're
there.
sort of living through this
15 minutes to
supply chain
power hour.
engineering a little bit out in the open. Every little thing comes out. And it might take a week per plane to fix some of these things, and it adds up. But they will sort it through. They're re-engineering their supply chain, as is Airbus. And the demand is so strong, and airlines compete with each other to order these planes, right? So in our view at Morningstar, we think of Boeing and Airbus as having sustainable competitive advantage, essentially as a group, as a duopoly. And airlines have none. Airlines will trip over each other to order those planes and pay up to get on the order book. Right now, both Boeing and Airbus are saying their orders are filled up through 2030, right? Which is why they're adding capacity. And so if you're a startup airline or a growing airline, you're planning years in advance which planes you're going to buy. They're going to be a little bit more fuel efficient in the future and so on. So that's the backdrop in terms of a long run, very positive demand story for Boeing that is, battered around here in these as these supply chain issues come to light.
So something like Spirit Aero and the issue that was found back in April. How many suppliers are there? How big of a deal is this? Is this likely to happen again? How worried are you about what has occurred? I know it can be digested now this time, but how big picture of a problem could it be? Or less
well, Spirit's an interesting case. Yeah. So I promised myself I wouldn't say the worst is over, because some of this is going to happen again. There's going to be another ripple, another defect, and the late, the last couple of these have been essentially process issues or something that wasn't installed exactly according to the documentation. And what's at stake is that all that stuff has to be certified as airworthy and safe, and that's the kind of the name of the game in this business. And so that's also why I think there's so much scrutiny on these issues. Spirit is an important supplier to Boeing, used to be part of Boeing. And I'm sure they will sort out the salary negotiation that's going on right now. Everybody wins when those folks, go back to work and can keep supplying these parts to Boeing.
Right. Well, you already said you're already counting in the delayed deliveries of the 737s, the 787s, sort of, what that is, what that animal is. One thing, you talked about the middle class and them wanting to travel, and we certainly have seen that this summer and, last summer too. What about business travel, and where does that fit into your forecasts?
Yeah, it's an interesting story. So the way I've been looking at it is, and the airlines, have been reporting they're seeing interesting stuff in terms of how people's habits have changed. For me, one of the interesting parts was a comment made by an airline exec that lo and behold, a business traveler and a leisure traveler could actually be the same person. They're just maybe in the old days, they would do their business and leisure trips separately. Now they're combining them a lot. And so really the airlines will just have to tweak how they kind of identify, are you on business right now or on leisure right now, or are you interested in paying up for a more comfy seat, or are you bringing 3 family members or what have you? That used to be easier because you'd be calling from your corporate travel desk. Now everyone's booking their trips on an app and so on and so forth. But the airlines are going to just modernize how they identify folks and get loyal travelers the perks that they want.
Yeah, I think you make a great point. I've heard a lot of that. Someone, changes the end of their business trip and flies to the next. So it's half business, half leisure. I think you're right on with that point. Nicholas Owens, thank you so much. Great luck there at Boeing and the big picture trends. Morningstar Research Services, and I know you have a 225 fair value and 3 stars on Boeing. Thank you. Still ahead, let's bring in our panel to talk about one hot stock, and that is NVIDIA. So now what? Our guests will break down the price points that they are watching. Obviously, NVIDIA has been an AI story for the ages. What's next?
Getting close to the lows here. 8 minutes to power hour.
But I think there is some concept that people could
A little
say,
lower
okay, I'm going
here.
to take some profits from this and move into some other names. You know, those names could be anything. It could be Avgo, it could be Palantir, it could be anybody else who's using AI. But with the amount that stock is up this year, that could happen. I'm not predicting that could happen, but it certainly could.
Right, understood. Matthew, I mean, your price target's 490. The recent high is 439 and change. How's it going to get there?
So if you look at the at their sales numbers, it actually looks like, if anything, those numbers could go higher. Over the last 3-4 weeks, the conversations we've been having suggest that, if anything, momentum around GPU servers has been growing. It looks like there simply is no availability of NVIDIA H100 GPUs into next year. So you could see their data center number continue to grow and exceed street expectations for the next 3-4 quarters, as there's an arms race to build out capabilities around training large language models.
I mean, there's definitely, I know over at Wedbush, you've been upgrading this to an outperform. When you think about NVIDIA, I mean, where is their AI is not going away, right? I mean, I almost feel like if you were to have this water cooler talk, Matthew, you would give us the 1, 2, 3 punch. Like, this is why AI matters. I mean, this is not going away, right?
So, Nicole, I think the question really is, when we get beyond the next 3-4 quarters, when the large CSPs or hyperscalers have built out their capabilities in terms of training these models, then what are the use cases around AI? Certainly, there are some that have clearly evolved. For instance, coding. You can use ChatGPT to help with coding.
Barbecue still 22 cents, up 12 and a quarter.
Emails.
I'm into power hour.
Creativity applications. But the real question in my mind is,
no Friday sell off yet.
Beyond building these large language models, what's the success going to be? Do you see something like Bing using ChatGPT displacing Google in search? And I think eventually it comes down to how much efficiency can workers gain through the use of these AI models that in turn creates value. That's going to dictate how quickly AI grows. But what I can say with more certainty is, the next 3-4 quarters, as these companies build out their capabilities, there's just no slowing for NVIDIA.
Yeah, without a doubt. And that's a conference call conversation. I think so many CEOs are looking how AI can help them with efficiency or save money or whatever. Kevin, as you take a look, and your target is lower, in fact, than
all right, we got the cup here.
380 target, which is lower
Oh,
than
not
where
the cup.
NVIDIA is today. But you have
If
other
we get a handle.
players in the group. I mean, and competitors. Are there other
433.
names that you like better, or why?
A little higher for a handle.
I just want to clarify that our target is not 380. That's what we see as the support level on the chart. And what I meant by that in my notes is that if you're trading this thing, 380 is a strong support level. And the VIX being low at 13 in the market, normally you wouldn't want to sell puts because you can't make that much money. But NVIDIA moves so fast and so hard. I mean, in the last 3 days,
Barbecue moved up a little bit there. Spies still coming down.
You can make money selling puts on that. So 380 is our support level. We don't have a target on the stock, but that is our support level.
I said it wrong. Yeah. All right. So just quickly, I only have a few seconds left. Other names that you may like, Kevin?
Well, Square, for instance. I think it took a really unfair beating several months ago when the short seller went after it. I think there's a lot of opportunity there for it. But I mean, pretty much every single company is involving themselves in AI these days. Amazon, for instance, had that big announcement yesterday where they're spending 100
cut might not be done
on their AI projects. So Amazon is one of our favorites. Square is another favorite.
Yeah, thank you both so much. Great to see you both. Really appreciate it. Kevin Riley, Matthew Bryson, thank you. And thank you, friends, for being with me here every single weekday on the TD Ameritrade Network. Love being with you every day at 11 a.m. and 2 p.m. Eastern Time. I'm Nicole Petalides. Have a beautiful, safe weekend. But you have to keep it here. It's going to be a very busy close. Oliver Rennick, Market on Close, standing by next.
Into Russia using nukes in Ukraine would mean war on NATO. I don't see that. New low of the day. See if it cups here. That's flushing. Jeez. Alright, we got a shoulder, maybe a head, see if we make another shoulder. Or maybe call as a cup. And power hour now. C-SPAN. I'll watch it right now. I'll check it out. There's your bounce. Wick. Stop loss triggered on everybody. Handle maybe. Barbecue holding up well for Friday. 22.19. Up 13.2%. Getting an engulfing candle here on the 5-minute. We could get a handle, or we could still be in a range. You know, we could move all the way back up to VWAP to make the better right shoulder. Yeah. Only cup and handle if the handle forms. It all relies on that handle.
Vehicle company making layoffs, but is that indicative of the economy, Kevin, when it's really, I think one could argue, specific product strategy that is just shifting over to a different, emphasis for them?
You know, Ford's going through such a metamorphosis, Oliver. I hope they don't get caught leaping when they should be looking and looking when they should be leaping, is what my old boss used to tell me. Oliver, you know, right now they're so heavily investing on EVs, betting on that. But, you know, I'm sure that their legacy autos are what are paying the bills right now for them, because they're certainly not selling a lot of EV cars. But this is a constant attempt by Ford to stay in the game where it comes to cars. Remember, they've already abandoned most of their regular cars other than the Mustang. They're really just making Ford F-150 pickup trucks and vans, right? Their fleet section. Now they're going to EVs. They're doing the F-150 EV. They're doing the Mustang EVs. I think they're trying desperately to figure out where they fall. Somewhere between legacy engine cars and EV cars. And boy, this transition, Oliver, it's been painful for them, trying to figure out where they fall. So I don't know how this is going to play out for them. They certainly have products that people want. Right? The F-150 is an extremely popular truck. The Mustang is a popular car. But boy, besides that, I don't know where they fall, Oliver.
Well, they're falling today, about 1.5%, but not the only auto business down. GM's lower by 2%. Tesla's down 3.5%, as once again we see that stock fading now for a second big fade this week. The earlier one was on Wednesday. Also, pretty wild video of Ross Gerber, the one and only, and disengaged from Tesla using some of its self-driving. I just retweeted the video. And the car just blows. It looks like it blows through the stop sign. Side note, go check it out. Okay, the other story is with Starbucks. And I think these stories are important because we're really trying to figure out the status of the economy. It's a hard thing to describe right now. It's largely better than expected, but is it strong and is it powerful? I guess strong enough for Starbucks employees to demand more.
It is, and so that's part of the story. The other part of this particular story with Starbucks is what the company is allowing it to do, how it's allowing them to decorate their Starbucks cafes. And so shares are falling today. Workers plan to strike next week. They're protesting a claim that the workers were told to remove pride decoration at some of its stores, and that the company changed that policy without talking to the union, which is United Workers, I believe. And so United Workers says that about 3,500 workers will walk off of more than 150 locations of Starbucks around the country, and that Starbucks will have to impact that. We know so far that they're going to ask the non-striking workers to take on extra hours for that, to fill the holes of the people who will be striking. But Starbucks also had previously denied making changes like this to pride decorations and changes to any policy. They say that Workers United is spreading false information.
Yeah, that's pretty wild. That's a pretty big claim.
That's a huge claim.
They're just saying they're lying.
They completely took it to a whole different step. They said they're spreading false info to deflect from their failure to respond to bargaining sessions for more than 200 stores and current policy. They said that they never did change any current policies as well, but they say that the current policy allows store leaders to decorate their cafes, including long-standing policies on store safety. Now, there is a ban on hanging decorations on windows or in other places where they could restrict line of sight for the barista who's behind the counter. That's been a rule.
Boy, dramatic stuff.
Very dramatic,
Starbucks.
very technical, right? But some, I heard one person, one analyst, one journalist as well, talking about this as if it's part of the culture wars that are happening. I don't know that I would 100% sign on to that. However, there is a clash here of culture happening, and it's impacting the economy.
Starbucks really seems to always be at the center of a lot of this stuff as far as labor goes. Seems like what it adds to the macro conversation, Kev, I guess it can't be that hard out there. We can't be on the precipice of deep depressionary recession if there's like a new strike at Starbucks every other month. How bad could it be out there?
Getting into the reasons that Starbucks is going through problems, I don't have any comment either way on that, but it certainly affects their ability to do business. And when the best interests of the company clash with the best interests of the employees and they're against each other, that's not good for the bottom line, Oliver, as you know.
Yeah, stock's down 3%. All right, weird day for sure. Okay, but interesting. The dollars don't quite agree. Stocks, the bond market, throw in a little surprise hike from the European central bankers, and how much of this confusion is about what's going on with the central bank?
Well, I think the central bank, has a big say. The European Central Bank has, kind of an interesting viewpoint because they're not just looking at the United States, they're looking at all of Europe, and they're seeing inflationary pressures that, transcend from the United States over into Europe. And for them raising the European Central Bank rate like they did, kind of goes counter to what we thought was happening here in the United States. So there's definitely confusion out there, without question.
What do you think in particular here is the cause of that? Is it the idea that we're going to hike a lot more later, but we're not going to do it right now? So should we believe that or not? I mean, is that part of the confusion, the market trying to figure out what exactly is going to happen in the next 4 months for interest rate policy?
Yeah, so when Powell, when they recently announced that they were not going to shoot rates higher and, continue to push rates higher, he also said that, we don't take out the fact that we might have to. So there's always that, contingency there. And when you see Europe start to continue to raise their rates, it, there tends to be a relationship between the European Central Bank rates and the United States rates because we're so closely tied to each other. So I think that there's, kind of, a toe in the water as to us not having to raise rates. I actually have put out that I believe we're entering into a Goldilocks type of economy where we're going to see rates not go higher, although there is the possibility we will. But I think we're starting to trade towards 2024 numbers and starting to look out that far. And that's usually what happens around 6 months into the year. You start looking out to the following year for where interest rates are going to be and where earnings are going to be. And I'll tell you, I really believe that things are going to get a lot better here in the United States in the short run.
Tell me why. What's the most compelling evidence for that?
Well, you have a slower, you're going to start to see a lot of discussion about how slow the economy is, although we're not going to be in a recession. Goldman Sachs put a possibility of a recession at 25%. They came out with that about 2 days ago. And so I do not believe we're going to go into a recession. I just think that we're going to start to see the 10-year Treasury go lower. And as that happens, the valuation of stocks are going to increase because the valuation of stocks plays a lot off of the 10-year Treasury. And if the 10-year Treasury is lower, the acceptable price earnings multiple on stocks it goes up. Also, the S&P, as you know, is really being moved by about 7 or 8 companies, and all the other companies have not moved up at all. They're really flat for the year, and I think that positions them for a really strong upcoming when earnings start to come in and they're a little more favorable. And then you're going to start hearing some of the whisper numbers come out, just like they did with Adobe the other day. Adobe had, an earnings report, but its whisper number was much higher, and they met that whisper number. And I think you're going to start to see a real positive happen, really throughout all of the United States.
So then if the economy firms up, that's probably going to push you more towards cyclical themes and commodity-linked assets, and not exactly the big growth story that's been driving this market the last 4 months?
No, I absolutely love utilities. Utility prices are going to go much higher. Anyone listening right now, just start to overweight utilities, because as interest rates start to go sideways, which they're doing now, and the dividends on utilities become more attractive when they're not going up, but plus the cost to generate energy has come down. Natural gas prices have come down and coal has come down. And those are two of the biggest energy providers for utilities. The earnings for utility companies are going to go really sky high. I think you're going to see a really nice total return on utilities towards the end of this year.
Do they need to be new energy utilities, or can it be gas and simple electric power?
Yeah, I think it's the old blocking and tackling type of utility. And, NextEra is very much involved with green energy, and those have gotten quite a bit of a bump. And I heard some conflicting numbers the other day that wind and solar is cheaper than nuclear. And I've tried to get that confirmed, and I haven't yet. But I do know that green energy is becoming a lot more cost effective, but that has a lot to do with government subsidies, I believe.
It indeed does for a lot of it, for sure. Do you view them as a safety, defensive style trade? I mean, if economy's going to firm up, I totally get the idea of having the consistency of buyers of energy, but why not smaller businesses or those that need a real kind of cyclical boom time to happen? Wouldn't you get a little bit more beta for your trade that way?
You would, but I'm kind of a nervous Nilly. I like to be a lot more conservative, and I like to get income off of my investments. And if, in fact, we do have a rise in interest rates, which I don't think we're going to, but if we do, those are going to hurt the small cap growth companies the worst. Now, if you do want to play something that's going to get a big boom, it's going to be the biotech market. There's an ETF, LABU, which is three times LABU. It's 3 times the biotech index. And I think as interest rates start to come lower, biotech companies are very interest rate sensitive. And I think you're going to see a big jolt in the biotech industry. So that one I'm really hoping does well. So if you're looking for a big
yeah, that's it. You did a 180 there from the utility to the levered 3X direction biotech fund. I love it. All right, so we got a little gamble in you after all that.
I can speak out both sides of my mouth. But
love it.
But that was one I really
I have the handle here.
Love details. Thanks, Ed. Have a great weekend.
Right at that line we have drawn.
Ed Butowski, managing partner at Chapwood Investments. All right, the steady as it goes utility trade, or if you're looking for a little bit more bang for the buck, the stab with the LabU, levered, biotech. All right, Francis Newton Stacy joins us next. Always a great commentary for the technical and fundamental analysts out there. We'll mix it together to understand why she's a little cautious.
Gosh, lag sucks. Yeah, it's all happening the last hour. See this? Just chop and mess all day. Set up this head and shoulders. Inverted cup handle. If we have enough room for this to play out. We should. Yeah, there's been a head and shoulders on the 1 day on SPY for a while. Kind of shoulder, head. Got them all on smaller time frames too. Easier to see on the hourly. Head, shoulder. This shoulder's just kind of elongated now. Here would be like your neckline would kind of be like right here. Yeah, it's not to say that it can't have bounces before then though, because also see once we test this, we'll see, because this could be a big cup and handle also, inverse cup and handle. So not to say it's not still coming down, but you're gonna have retracements just like this day. Yesterday you had that rally. Once we hit kind of this, probably have a retracement, maybe a gap fill back to 435 or so for cup and handle, if that plays out. Doesn't have to, could flush through, but yeah, 430 would be next after that, that 432 support. There you go, it is happening. Well, I wouldn't do it today since it's Friday. Might as well wait till Monday. Unless you're expecting a gap up on Monday. Or a gap down, rather. Barbecue pushing up a little bit. 22, 20, oh, 22.49, up 14.7. My share selling worked. Push it up another 2%. That is neat.
But yeah, the rest of them are still in the camp of more rate hikes to come this year, right? So the short-term rate is definitely going to remain elevated, though it hasn't taken out the October highs. We have, we have a new low on inversion, so we have negative 102 basis points there. Inversion 11 out of 15 times.
Yeah, there's no reason to hold it over the weekend if you're
coming. Labor is starting to
barbecue. It's working. Green on it.
Indicator.
I'd wait for a low of the day.
See
if we flush through there.
Really are like
last 10 minutes though can get sketchy, so
very slow,
maybe close it before then.
The top, but then once it starts getting
New high of the day on barbecue, 22.68.
So we have
15.7. Put the buyback in. We'll see if we break here.
And the S&P
need to break.
Are still at lower highs from March 22, whereas the Nasdaq 100 actually went up for that triple top resistance. And so we have to watch to see if we're going to have a breakout there that would substantiate these multiples and would substantiate continuing upward momentum.
Okay. So it seems then that the risk to your thesis and these positions would be then that Powell actually doesn't end up following through on those hikes, because to describe him right now as hawkish, I feel like that's another debate to be had where all his
buy high, sell low, baby.
Hike, but he still didn't. What's
buy high, sell higher.
He's going to do it later.
Ways
well,
to
you
trade
have
it.
A couple of things happening here. First of all, they've been able to kind of shore up the banking problem from earlier this spring, and you haven't had another credit event in the interim of quote unquote breaking stuff. So, he may be waiting for that. Then you've got the Taylor rule that I'm sure he's looking at, which that puts, the targeted interest rate 2 points above inflation. That would get us up to 7. Inflation is remaining sticky. Wages are remaining sticky. And so unless he breaks something, he really has to keep this hawkish narrative going. So we're just watching credit spreads. Volatility is muted. And then we're just watching the technicals on the tech stocks, because that is what is keeping, at least for right now, the assets elevated. I think there could be a rotation maybe into some more interest rate sensitive type stuff. I heard about the utilities conversation. Obviously, if we're done with rate hikes, that will happen. Now, remember, when you have yield curve inversion, it's when the yield curve starts to re-steepen that you typically get the credit events. And so we're just sort of sitting in the calm before the storm, is my opinion. Obviously, I hope for a soft landing, but as these rate hikes are lagging.
Oh yeah, that's a good
And
resistance,
as the liquidity in the
2350.
system continues to drop from balance sheet reduction, et cetera, the credit risk actually
That's
increases
that
in the
OG
background.
dip
So
down
I'm just
here.
not ready to go long
Back in April.
AI.
That
While
high
I'm sure
here,
AI is
May
going to make a
9th.
huge impact in the decade to come,
A
I
low
think we
here.
still have a little bit more
5th.
fallout from Fed tightening before that really takes hold.
High here on the
So we do
20th.
have some belief in
The support and
sort of
resistances on
secular
this OTC stock are just
technological,
like
ability
the
of
T. It's kind of crazy.
some of the new stuff that's been coming out here. We just got to get through this period of inflation fighting first. So we talked about the risk then if the Fed goes too dovish. The last part then, to make sure we cover all our bases, is what if by going on pause, he allows inflation to reroute and the economy to firm? What if our numbers actually pick up? What if, lo and behold, jobless claims start going down again, and then we actually end up at 6% terminal funds now instead of the 5.4 that they had to push up to 5.6? What if he's got to chase his tail even harder? Does it all just blow up?
Well, that would really put him in between a rock and a hard place. I think the
Screenshot always equals sell.
here, but I think the reason that there might have
I
been
have that on a
pause, and
post-it
although I've
note.
seen,
I learned that years ago.
as far as the refinancing
I haven't
goes in the
screenshotted
commercial
since.
real estate space. The latest
It's
I've seen is
genius.
I've seen higher estimates, shorter periods of time, but the latest I've seen is 1.4 trillion over the next 2 years or so.
Yeah, kill
has to
losers
go in for
quickly.
refi, and it becomes this conversation of whether or not they can negotiate extensions with the lenders, or
Yeah,
the
don't be
lenders are
attached.
also
Don't be
losing
married.
money,
You always buy
whether
back.
they can
Absolutely.
negotiate those extensions, or whether they just go, let's cut our losses. There are so many losses on these buildings. Let's just send the keys back to the lender, and you have these, sort of this wave of default.
As long as you're not getting into a whipsaw of over trading.
I think he was wise.
That's the
not
other
to
side of
take
that
up
coin.
rates even by 25
Just goes
basis
against you a
points
little bit and you have no
ahead of the
conviction. Just sell
start
it.
of this
Then it
massive
goes up, and you buy
refinancing
back
that's
in
gonna
higher, and then you
occur.
just kind of start
There are
whipsawing.
$3
So,
trillion of outstanding,
but
commercial
yes,
real
if
estate
the reason why you
loans
got
on
in, whether it's
banking
TA or
balance sheets.
fundamentals, if
So
that
that's a
changed,
pretty
there's no
large
problem in taking
syndication, and
losses.
that, if it was really to take momentum in defaulting, first of all, it's mostly smaller and regional banks, and those
TA
have already
fails just like
had so many
fundamentals.
problems this year. So, I think he's just becoming a little bit more cautious.
This, we'll see what happens here. It's 3:30.
And I'll
Last
make one other point if
last
you have
15
time.
minutes or so.
Things like
This
tech
could all get
stocks,
broken down with just
if
buying on
growth and
close, selling on
inflation are
close,
going
market
up, or
maker
growth is
balancing,
going up
whatever
and
happens.
inflation's going down, it's the
But so
bottom-up
far, this is a
fundamental
nice looking
analysis
cup
that
handle,
matters.
inverse cup handle.
But when you have growth and inflation decelerating or
Yeah, I
going
just got
down,
stopped out.
the macro tends to trump what's happening on these individual balance sheets.
Barbecue,
and that's
high
what
of
we've
the
got to
day
get through
with some
before we
volume,
can just go
22.68.
gangbusters all AI, in my opinion.
All right. Love it. Francis Newton, very thorough as always. Some excellent frameworks for us to navigate. Always a re-watch worthy interview. Thank you very much.
Thank you.
Francis Newton, Stacy from Optimal Capital. All right. When we come back, let's trade some options. Bearish trade in the chips. Micron this time down 1.5%. But Coinbase, of course, is loving all the crypto news. We're going to spend some time with that when we come back.
Yeah, just same way cup and handles bullish, inverse cup handles bearish. $1 in 30 minutes? What? Nice Friday hype to be let down with. Start your weekend with a letdown. everything that's bullish, any bullish pattern, you flip it upside down, it's a bearish pattern. Yeah, see, here's the move. Just didn't get the best entry, so it stopped me out. And we're getting too close to the end of the day. All right, I'm done.
.5% right now. Someone's buying some puts or what?
Yeah, well, they got earnings next Wednesday. I think that's going to be the key catalyst here. Option market's pricing in about a plus or minus 6% move in the shares. Had a good run up this year, up about 30%, even though it's down a little bit today, right at its 50-day moving average. So support coming into play. If it breaks that 50-day moving average, is that going to signal maybe some more downside? They've got the issues over in China, right? The cybersecurity affiliation of China is kind of putting the hammer down on them. They announced $600 million in investment in one of their plants there, trying to appease the Chinese government. They're also investing in facilities in India, $825 million, $2.7 billion Micron chip testing plant in India. So spending a lot of money trying to maybe work through some of the headwinds that they're seeing in this cyclical downturn in memory chips at this point. But we had unusual option activity, not like a massive trade, but some positioning ahead of this earnings event on Wednesday. And I think somebody's thinking that we might see a bad report here because saw a trader come in and buy 2,000 of the June 30th weeklies. These expire in 7 days, so you'll capture that earnings event. 64 strike puts, I bought 2,000 of those. $1.61 debit, so that break even, 62.39 over the next week. That's about 4% below the current share price, within that one standard deviation range that the option market's pricing in at this point. You can see they're setting up for maybe a little bit of disappointment after that 30% run up that we've seen in the
Yep.
Okay. So that's pretty simple. Just buying downside.
Buying some puts.
Looking forward to fade. All right. It's been kind of sluggish compared to the other ones. You know, I know it's a good year-to-date percent return, but just not quite as ballistic as its peers. Not vertical. It's more like stair steps for Micron.
Yeah, and you wonder the implications. Some of their competitors, Samsung, said they were pulling back on chip production in this particular area. Will that benefit Micron? Maybe the news is already built into the stock price with the rally that we've seen, but this is definitely one of those areas that has been slow to pick up as opposed to the NVIDIAs and AMDs.
Okay. All right. You've got bullish trade Snap. Let's go there. As social media has been all meta all the time, though I did see the CEO talking about how AI bot on Snap is going to be so popular. He had a quote that said something like, people want to talk to this as much as their friends.
Yeah.
Wrong?
Well, part of the problem with the 380...
What's he thinking?
Yeah, one of the 383 million daily active users that they have on this platform is they haven't been able to monetize that maybe that age demographic that uses Snap on a daily basis. They did, at the end of May, introduce their generative AI feature, My AI Snaps, and they're starting to get some traction in their Spotlight ads business also. But the digital advertising dollar spend has been focused on a few companies, Google, Alphabet, Meta Platforms, and now in third place in that space is Amazon. So Snap continues to lag the others in social
that's
media.
Why they're hyping it up. Their AI. It's like now a little thing. You go open up your Snap and you can chat with it. You know, I don't know. I haven't. I'm not like a huge loser, but you know.
Well, that's kind of. That was kind of harsh.
What's it sending? But it's such a ridiculous comment. He says people are going to want to talk with this more than their friends. Like, oh, come, that's sad. We don't want to be in that state where we're talking with the Snap bot.
I think you have the option to do that. Not saying that you're going to, but you have the option to in case you want to get some information. Hey, you slap AI on anything right now, Oliver, it's typically a benefit for your stock.
I'm moving up there, so.
Let's come with AI and Snap's going, we'll make AI friends for you to snap with.
Could still make a handle.
Yeah. So
what's the trade, Tom? Come
on. Maybe it's failed.
Option activity out in the August monthly cycle. So a couple months till expiration on this one, about 56 days. Traders were buying in over 20,000 the August 12 strike calls, average debit of about 90 cents. So that break even at 12.90 over the next 2 months, 18% above the current share price. Call volume's about double normal daily average volume that we've seen over the last 5 trading sessions. So yeah, pushing into this name, you know, you get Snap up 2.5% on a down day for the overall market. People are looking for upside calls to speculate on, and that's what we're seeing here.
Okay. All right, let's talk some coins and a levered Bitcoin ETF that's out now. Just got approved, and the thoughts are that the spot is coming next.
Yeah, and you've got BlackRock and some other big names that
barbecue flirting with that high, 2269, 15.7.
The reason that the stock's up nearly 7% today is based on that.
I think it might just pop up to 2350 here.
Coinbase on a ruling that reinforces the ability for companies to channel customer and employee disputes into arbitration after the ruling. So Supreme Court 5-4 ruling on this. It's been pretty positive. Said allowing district courts to move forward as the appeal is ongoing and reduce the benefits of arbitration. So this was based on one case a guy brought against Coinbase $31,000 that he lost on some promotion using not one of the stable coins, but one of the altcoins. So good ruling for them for
Runs down
Coinbase.
4.3.
Stock's up 73% so far this year.
Not really bouncing on that trend
And
line.
some people buying calls on the back of this this news.
Bingo, there it is.
Yeah, right in the money too. Now
BTC,
remember,
not the best.
30,000, it's back above. Get your calls.
Yeah, this stock,
before they're gone. Fomo.
The stock rallied on this news and initially was down on the open, but they were in there buying the June 30th weekly, so a week till expiration. They bought over 10,000 60
barbecue 2270 was the high.
270.
There's volume there. It seems like it's about to.
So that break even at 6270
rip.
over the next 7 days is only about 2% above the current share price. Call volume exploding today, about 3 times normal daily average volume, and this is one of those names that we see hefty volume on a daily basis. So yeah, going upside, really short-term positioning here, seeing if they can extend this Coinbase rally that's been pretty substantial. You know, you've got Bitcoin having a nice week this week also. Coinbase not participating in much, but getting a nice bump here today.
All right. Nice. Bullish crypto action finally. Yeah. It's been just waiting in the hopper. You could feel it the last 3 weeks. When was Bitcoin going to catch up? When were cryptos going to catch wind of the big risk-on move? It took a little while. Took some pretty major filings to get there, but hey, eventually they woke up.
Yeah.
Now we see what kind of follow-through they get, because there's been moments, many moments, in crypto's past when something happens during the week, it gets people excited, then it runs through the weekend, but that hasn't happened in a long time.
Right.
Crypto hasn't done weekend volatility in a year, basically since the Fed started hiking.
Right.
It has never done anything until it gets the cues from the broader, more liquid markets and stocks and bonds during the week. So if crypto does something this weekend, I think that would be a pretty big deal.
I think it would be too. I mean, we really haven't had that weekend volatility since the FTX fallout, right? And now it's been consistently traded on a daily basis. I mean, look at the stocks today. Is it risk on or risk off today?
Yeah,
well, it's risk on in
market's
Bitcoin.
Risk off, but then the crypto stuff's risk on.
Yeah. And then we saw that reversal in gold also today, even with the dollar higher.
Better late than never, coiners. Okay, welcome to the party. Stock's been rallying for the last 6 months. Let's see if Bitcoin can get off 30K this weekend. All right, coming up, let's talk
15
about
minutes.
business having trouble getting off the ground, and that is literally what they do. It's their one job. It's Virgin Galactic, and apparently accomplishing that job is going to require a lot more cash, and the market doesn't like it.
Oh, did you just buy the put at the low of the day? Where'd you buy it on that? Yeah, I closed out. Because that wasn't the handle. It looked like it was forming, but it's too late in the day now. Still could be forming, but yeah, definitely stick to it. Definitely stick to it. And you definitely could be right. Like, I'm not saying it won't gap down. I guess holding over the weekend is usually, you're just giving 2 days of theta away, basically. That's my only thing with it. But as far as it being bearish coming into Monday, yeah, you're probably right. Typically, red Friday is a red Monday. You have a little head and shoulders here on the hourly too. Yeah, I think we need to get a 432 test, a bounce on that to make this inverse handle. Melting up here. Don't make a handle. I just last 15 minutes, a little sketchy.
The company to sell $400 million worth of shares,
Can I-
time dilutive to its current stock. Now, the company does expect to use the proceeds for the development of its spaceship fleet, as well as its infrastructure to scale its commercial operations and other general corporate purposes. This news does come after announced it has completed its previous $300 million at the market offering. And of course, we have seen shares, all things considered, on a pretty significant uptrend following the announcement of their June dates for their first commercial space flight, and then we'll get one later in August. So that sends shares on an absolute tear. So even with today's move to the downside, we are still up 26.5% month to date, up 26% now year to date, and now down 49% from our 52-week highs. So again, this name is very volatile. Now it is pacing to close out this week down 7.5%. And the analysts don't necessarily feel very strongly about this name. Of the 13 analysts covering this names, there are only 2 buys, 6 holds, 4 underperforms, and 1 sell, with the average price target right now around $4.47 a share. So that doesn't really give you much to hope for either, considering we're about 13 cents below there at current levels. So while I do think this is a very cool concept, and I would love to be one of the lucky people going to space, I just think this company has its balance sheet and cash issues it needs to work for.
Yeah, it seemed like maybe it would be a good week for space exploration, and probably taking a little time out on some of the deep sea stuff. But when you got to unload a bunch of shares onto your clients, doesn't matter where you're going, that's going to really hit the stock. We talk about this all the time with George and these startup companies. It's like the #1 risk, and they just walked right into it. And apparently the market didn't see it coming.
to me, this was tale as old as time because, like you said, we saw shares surge. Of course, this happened. I mean, this was, I'm sure George could have foreseen this happening because it is something that a lot of these small
Looks
growth
like an
fall into.
Austrian waitress.
I actually would think that this would be not a great week for space travel. I think that the explorative traveling right now is going to take a pause.
Yeah, all right.
Czech Republic and
appreciate it. Okay. Yeah, rough week in that department.
serving
Chris
up
Robinson is with
Das
us.
Boot.
He is exploring the corn, bean, and general agricultural fields of the Midwest. How's it going, Chris?
It's a big weekend. The next 2 weekends are huge. We've had a tremendous rally in the past 3 weeks. Corn rallied $1.40. Soybeans rallied $2.50. Wheat rallied $1.60. Just today, in the last 36 hours, 48 to 76 hours, we had a big correction. What does that mean? Corn dropped 45 cents. So a lot of people are getting whipsawed. It's been a great rally for farmers and producers because they've gotten a chance to get back. We were just at about $4.90 corn, which is a very low price, sub $5. We got back north of $6.30. So the key is corn's heading into pollination. What does that mean, pollination? If the weather isn't just right, we'll have lower yields. Lower yields mean less supply, higher prices.
Okay. So the higher prices, we talked about having some macro implications. But what we see in the pressure on crude oil and copper, commodities as a whole seem to be having some of the same hangover. I know look, it's been a great couple weeks for the ags, as you pointed out to us. But it also kind of seems like on days where they all move together, there is this kind of macro malaise. What do you attribute that to?
No, it's definitely, 2 years ago, it was the inflation trade. People couldn't get enough commodities. We had tremendous rallies from 2020 to 2022, all-time highs, 10-year, 12-year highs in all these commodities. And then between, those pandemic highs, 2022, in the last year and a half, a lot of commodities gave back at least half, if not more,
there it is.
of that rally. That was fueled
5
by
minutes
people.
flush, 10 minutes
A lot of it was fueled
go.
by fear and greed. And so now we've come away from the inflation risk. Now it's, fight the Fed, don't fight the Fed. So that whole trade has shifted. So you've got money managers getting away from wanting to own commodities as a hedge against inflation.
Okay.
Here's our handle. I don't know if it's gonna play out last 10 minutes though. Like it's gonna go anywhere.
Data, we're gonna get that next week.
Happen fast.
Yeah, well, we've got another USDA report, but this is the key time of the year for corn. Corn will make a break, and then soybeans, they'll be figured out kind of in the later end of August. But just what you said before, prior to literally 3 weeks ago, corn had dropped a tremendous amount. It was about $2 off its highs. Excuse me, at least $1.50.
Brokerage gets laggy towards the end of the day when there's more volatility.
If you don't trade grains, soybeans had dropped $3, right? So in just 3 weeks, this was all driven by weather. This fear that it's been hot and dry, flash drought, whatever you want to say. So that's what's driven this. I don't think if we had not had this weather issue, you wouldn't have had this rally in the grains.
Oh, it came right down to this support.
Reality. I think at the end of the day, big picture, you were right
That might be
earlier
it.
that there's pressure on commodities across the board. Crude oil, if crude oil settles below $63, it's going to be that'll be a big story. You were talking about copper. Copper made a run for 4 cents. It looks like it's back on its
I got
way
stopped out right there.
down to 3. I mean, it gapped lower today.
Hey, I'm glad I had exposure to anyways. That was fun.
The British governor
Had the right idea.
The 50 basis points. So there's a lot of headwinds against commodities
There
right
it goes
now.
either way.
Yeah. The biggest one is that whole trade. I called it the trade du jour. Everybody wanted to be long commodities. Now they're looking for
Last 10 minutes of Fugazi for the week.
Reversal.
Whole week's worth of Fugazi packed into the last 10 minutes here.
Keeping us ahead of where it's
Just
steering
made
next.
another shoulder.
Managing Director TJM
Worked all the way back up to
Institutional
make another
Services.
shoulder.
Crude oil trying to firm up throughout the day. Still
Tempting
red,
me.
but better than it was at least. Trying desperately to cling to that $70 level. Nate Peterson and Kathy Jones
Totally toying with
join
me.
us to wrap the week when we come back. Less than 10 minutes left.
I didn't do it. That's good. Oh, new high of the day there on barbecue with some volume. 7 minutes to go. What do you got, barbecue? 22.75. Highs going back to VWAP. I'd say still could be a handle here. Barbecue 22.88. Oh snap! Up 16.7. Look at this wick on the spy. 22.90. 23.50. Let's see if we hit that. Yep, we wait all day for the Fugazi on barbecue, 100%. Finally got it. Got the cup. Got the handle. Here's your breakout. Weird barbacoating fashion. %, let's see. Yep, 90% on iBorrow. Increased a little bit more. Well, that's because they didn't have any shares. It wasn't showing. He stopped updating at 11 on iBorrow. So just popped up here at 3. We're showing that higher rate now. Very good sign for a run coming. $22.90. Is right about just a little bit higher than where I last sold, other than today. $2.96. 4 minutes left. 23. Hit 23. Big's up almost 10. Dish is down 5. $23.50. See that next resistance, that's a pretty big one. Put those guys off. No bell. No Friday bell. 2309. Oh shoot, I have to sell more if I want to sell it. What? How'd you get the bell? What the heck? Who gave you the bell? The browser gave you the bell. Oh, we never get the bell from that. Well, at least you're fired on a Friday. You can enjoy the weekend. Look for a job. Thanks so much, you guys, today for your support this week. I appreciate it. Big day on barbecue. Up 17.35. You said you turned it. I was just testing you guys. Y'all fired. Y'all fired. Thank you guys for your likes today. Well done. Ace, thank you for the gifted memberships. Much appreciated, man. Thank you, Buzz, and hope you had a good week. Good weekend. Chill out. Take it easy. 50% Hughes claiming. Yep. That's probably what E-Trade's saying, isn't it? Yeah, E-Trade's claiming 15%. Thanks, Hugh. You too, man. Thanks, Trays. Thank you, Jay from the Bay. Thanks, Granite. Thanks, Buzz. And thank you, Tasty. Thank you, Ace. Red candle on SPY there into close. SPY came down 0.74 today. Intraday head and shoulders there. So yeah, those puts for next week might be good. Have head and shoulders up here too, of course. I think a little further and probably a bounce on 432 for next week. Or kind of maybe a inverse handle here from this cup. First cup. Yeah, it's coming down. It's just real slow. Slowly, which is expected. It went up so fast, it's going to slowly turn around. GameStop's down 2.5 today. Don't know where the bullish owl is when everything's down, but yeah, where are you? This is look bearish. Has that RSI divergence we've had. Kind of just has a kind of a head and shoulders here as well. Not look good. Bearish MACD. Could pop though with news or whatever. We'll see. This is such an ugly chart with the gaps. Thanks, Trader. Appreciate it. Thanks, Grumpkin. Have a good weekend to you too. Thanks, Christine. Big week next week, is it? So, IP did go up 2%. Congratulations to Ace. Hey, Ace, you also got an engulfing candle. Yeah, you might be bottoming out here. 26. Good. Might be finding support. Thanks, guys. Yeah. Barbecue. It didn't really. It got above this level. 2350. Didn't get above that yet. Momentum's in the right direction. I'm gonna be cautious next week, but if we do get a break, I'll probably be jumping back in with more shares. Otherwise, I'll wait, see if we reject this 2350 area. That's a pretty serious level, actually. If you look at it on here, got the support from way back here in April. That was a peak right here. May. There's support right here twice. There was resistance just last week, was that? Tuesday? Wait, what? Yeah, that was Tuesday? That's crazy. I traded this thing a lot this week. I sold out there. pop back in on Thursday. Huh. So anyways, yeah, that's a big level there, 2350. Super break that. Don't have an inverse head and shoulders really anymore. I mean, you kind of say this is, but it's more or less just in a consolidation range. So yeah, I might need news, but we did get some news that AK is pretty bullish, I think. So yeah, looks good. Have a good weekend. Good weekend, guys. Thank you so much for your support. Thank you for your likes. We'll see you on the socials or on Discord. Sub up, like up, comment down. Happy money sticks around. Thank you guys. Thanks for the support. See you soon.